When I first discovered this about Bittensor, I was kind of weirded out. I'm not going to lie. I was kind of like, okay, this is like a cult. This is a little weird. But then I started to lean in and I realized that the Bittensor ethos, the sort of like the spiritual Gnostic wisdom and philosophy and story behind Bittensor is so profound and so deep. If you want great, long-term, sustainable, incredibly profoundly positive impact to society for generations, you better damn get the incentives right. Bittensor is a better way to get the best people in the world working on a problem in the most effective possible manner, period.
The community on Bittensor is insane. Like, that's so engaging. Every time I release an episode, they're like, "This is the best episodes ever," and this is like great. Yeah.
Jay, we're leaving that in the podcast. And JJ, let me ask you about this. It's very interesting because when I look at the Bittensor community versus, let's say, I don't know, the Solana or the Sway community or whatever, or the Avalanche community, the Bittensor community, whether it's on Twitter or Discord or whatever, they're like very philosophical. Like, this is about growing intelligence, solving problems, saving the world, redefining capitalism, et cetera, et cetera. It's very philosophical. Whereas when I go on like other token communities, again, on Twitter or Discord, whatever, it's all about like, oh, here's what the chart says. Here's what you should be buying. Here's the candlestick, blah, 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 of trading for this. Like, it's very boring. I think this is a good way to judge the potential success of a token, is how enthusiastic the community is.
I totally agree. Not just enthusiastic, but to your point, philosophical. They have this kind of like almost cultish or spiritual alignment with each other, right? And when I first discovered this about Bittensor, I was kind of weirded out. I'm not going to lie. I was kind of like, okay, this is like a cult. This is a little weird. But then I started to lean in and I realized that the Bittensor ethos, the sort of like the spiritual Gnostic wisdom and philosophy and story behind Bittensor is so profound and so deep. And it also cross-pollinates and takes inspiration from open source, which I have dedicated my life to. And so if you deeply understand open source, and then you reason up from the first principles, fundamentals of open source, which is like, we're going back to Richard Stallman and MIT in the early 80s, and, you know, Emacs and GNU and free software, right? And, you know, I actually wrote a blog post about this that I'll share for the show notes if you're curious. Sure. It was more of a personal blog post. I was just blogging the ideas at the time. There was nothing around it, but there's this really interesting juxtaposition of philosophical motivation in the most impactful and disruptive inventions and projects and discoveries in human history. There's always a very deeply embedded philosophical motivation. It's philosophical. And so, you know, Richard Stallman created this thing called copyleft, which is a tongue-in-cheek opposite of copyright. And he said software should be free. Software is enslaved currently, but it should be free. And this is almost like free speech to him. It's fundamental. It's like a human right. And he wanted to imbue those rights on software source code. So you as a user, instead of being used by the technology, you could truly use the technology because you had power over it. The technology didn't have power over you. You have power over the technology. How is this possible? We need this thing called free software and the philosophical 4 freedoms. Freedom 0, 1, 2, and 3. Richard started with 0 because he's a computer scientist. So he started with 0. It's not freedom 1, 2, 3, 4. It's freedom 0, 1, 2, and 3. So freedom 0, and may get the ordering wrong, but there's 4 freedoms. The freedom 0 is the freedom to see and transparently inspect and read all of the source code. So the freedom to see everything. Second freedom is the freedom to change, the freedom to mutate or manipulate or modify the creation, the source code. Change it in whole or in part. Another freedom was the freedom to distribute. So I can take copies of that and I can distribute it and use it in any context. I can run it on my custom computer. I can run it on a proprietary computer. I can run it in the cloud. I can run it on a data center. I can run it anywhere. I can run it on a computer that I invent. I can run it using a different type of computer that hasn't been invented. That's what distribution means. I can run it. I can use it. No guardrails. 100% discrimination free. This is very critical of the 4 freedoms. Discrimination free, meaning you could be a terrorist. Discrimination free. That's freedom. The 4th freedom is to distribute with or without changes, which is I can run it, I can use it. And that could mean with no changes, I'm just doing the original, or I could make my own modifications and changes. How little or small doesn't matter, or how large doesn't matter. And I can run that also. Richard Stallman is the reason the entire technology industry exists. It would not exist in the way it exists today. Google would not have been able to be invented had Larry and Sergey not had access to C, C++, Linux, Apache, MySQL, PHP, a lot of these fundamentals. They would not have been able to do it.
And it's fascinating because, like, if you look at both the operating systems that run on all Microsoft software and you look at the operating systems that run on Apple computers, it's all based off of this one operating system called the Mach operating system, developed at Carnegie Mellon, which was developed on top of Linux, which was the open source Unix. So Next Machine, started by Steve Jobs when he left Apple, ran the Mach operating system, and then it was acquired by Apple, and that became Apple's operating system. And the entire Mach operating system academic group at Carnegie Mellon, which developed it, was essentially acquired by Microsoft. Like, they all went to work at Microsoft and even got their PhDs while working at Microsoft. So all the Windows OSs are based on, people don't know this, are based on the same operating system that all the Apple computers are based on. So it's interesting. Almost all software then comes from open source. And of course, we discussed last week, the internet was open source. There was closed networking software packages, and they're all gone now. That industry has vanished and is replaced by the open source protocol of TCP/IP. So these are just some examples of how powerful this philosophy is. And I just want to repeat, so 0 is the ability to see anything. The 1 is the ability to change it. 2 is the ability to distribute it. 4 is the ability to distribute it with the changes, or how would you describe 4 again?
So freedom 0 is the freedom to run the program as you wish for any purpose, Freedom 1 is the ability to study how the program works and change it however you want. Access to the source code is a precondition. Freedom 2 is the freedom to distribute the copies, right? To run. This is execution, like I was saying, to run it. And then the freedom 3 is to run it with or without changes, like I was saying.
And so what's interesting is people thought that this was somehow anti-capitalist, that you can't make money if all software is open source. But it turns out actually that almost the entire multi-trillion-dollar software industry sits on top of open source. Like, if you look at like the web browsers that we use, they all come...
Not almost the entire. Yeah. The entire.
Right. Like, everything basically stems from Mark Andreessen. People know him now as the VC at Andreessen Horowitz, but he developed, before the company Netscape, he developed Mosaic, which was based on Tim Berners-Lee original web browser. Tim Berners-Lee started the web. Of course, the web software, the first web server was open source, and all web servers come from that first software. And then, basically companies, corporations, they want to pay for help with the open source software. No one wants to just download Linux and run their entire company on it. they want to pay the Red Hats of the world or the Microsofts of the world. Hey, can you please help me, use this software? Or, hey, I need a better word processor than GNU Emacs. Microsoft, can you take GNU Emacs, make MS Word, and then you could sell it. Now, I don't know how that fits into Stallman's philosophy, but, every commercially available software comes from some open source root right now.
100%. 100%. And it's just the most powerful accelerative discovery in the history of humanity. Richard is a polarizing character. He's still around.
Where does he live?
I think he's in Boston. I think he's at MIT, or he might live in other places. I've never met him. Some of my early colleagues and partners at OSS Capital are actually friends of his, and they know him quite well. The actual like open source OG people that like actually created, one of the people who actually co-created, actually two of the people who co-created the term open source are partners of ours at OSS Capital, Larry Augustine and Bruce Perrins. Larry's from Stanford and Bruce is from Berkeley, and they were both like very significant contributors to open source. But, here's the interesting thing. Open source is fundamental. Open source is like free speech. It imbues the same framework of free speech to source code at a technological level, whereas we humans are more familiar with the notion of free speech because it comes from the Constitution and the Bill of Rights in America. And so we learn this from American history and sort of like the underpinnings of society and democracy and all this kind of stuff. However, at a mechanistic level, the challenge that open source has faced, and you have to take what I say very literally. I'm a very literal speaker. So when I say something, it's always like very specific. Don't expand too much beyond that. I think open source is incredible, and we don't need to change anything about open source. Open source is amazing, and it's going to be here for decades to come, maybe centuries to come. But what I think has been missing from open source at a mechanistic level is the ability to actually create a sustainable model, right? Open source relies on intrinsic human reaction to gaps in the technology landscape that are either too monopolistic or have a slow pace of innovation. Like they're not improving fast enough. And so you're like, let's use an open source approach. And then it really sets things on fire. You get thousands of people around the world that can see the thing and that they could contribute to it and all this kind of stuff. And it's amazing. People want to do it for their career, and they do it because they want to go get a better job. And maybe they're going to work at Google someday. They're going to be a senior software engineer. Having open source contribution on my resume is like super helpful. To be a super senior software engineer somewhere, it's like, wow, okay, that's great. I have some economic benefit from that in terms of my career, but I don't get any immediate reward. That's actually extrinsic, measurable.
Right. There's this feel good feeling when you contribute to an open source project and it's accepted.
Yes. And it's like socially brownie points or points on the board. Socially, it's like, wow, you're like an awesome person if you have all these open source contributions. But it's not economically extrinsic and measurable, right? There was a report that Harvard put out recently that I was mentioned in alongside Mark Andreessen. So that was a highlight of my life. And the professor, his name is Frank Nagel, and he now works for Jim Zemlin, my friend Jim, who runs the Linux Foundation, and created it so that Linus could actually get a incredible $5 million salary per year for decades. So Jim's made his contributions. But Frank, in that report called The Economic Impact of Open Source, said that for every $1 of contribution to open source, it is estimated that $1 will have $2,000 of economic impact in society or the world. That's an incredible ROI. However, the $2,000 doesn't go back into the pocket of the person that made the $1 investment. It gets disaggregated across society in this like spider's web and maze of sort of disjointed, disconnected, and disparate systems. And Bittensor basically solves this whole problem.
Yeah, so Bittensor almost allows a fifth freedom, a freedom to apply incentives in order to judge which competing open source alternatives are the best for a specific problem.
Sure, definitely. In terms of the, I would say for the economic incentive design, how those open source commodities get produced, absolutely. This is the way I think about it. You're spot on, James. What you said is 100% true. What open source is to source code, Bittensor is to incentives. Open source is still fundamental. Again, please do not get me wrong, but Bittensor transcends open source. I deeply believe that.
Because let's say you made an open source word processor and I made an open source word processor. Oh, it's great.
Yes.
We both made open source word processors. Now
Yeah.
people are adding to it and developing them. But
Yeah.
if I'm a consumer, how do I know which one to use? Well, and Bittensor, each subnet is an entire ecosystem to basically take, open source models, make them available to consumers in a friendly fashion, and use validators and miners to judge. The miners are competing with their own models, and the validators are saying, yeah, these ones are the best. And then
Yes.
everybody in the system, the consumers pay, but everybody in this system is rewarded with incentives, and those incentives are either TAO tokens or the Subnets tokens.
Yes, absolutely.
And if you extrapolate that $1 to $2,000, last week we were talking about, I think we were talking about Targon, where they have access to 2,000, H100 or H200 NVIDIA GPUs, basically $100 million worth of GPUs that they didn't pay a dime for, that the miners contribute those resources to the system in exchange for the incentives Targon offers. So that's the dollar of investment, is the $100 million the miners have put into one subnet. Multiply by 2,000, you have now, what is that, $2 trillion worth of potential eventual future value on just that one subnet.
On just that one subnet. What I would reiterate here is, again, Frank Nagel's really awesome report says for every $1 of open source contribution, you could see $2,000 of positive economic impact in the world, which I would say is measured many different ways. It could be value destruction of a toxic incumbent technology that's monopolistic and slow moving and extractive, and right. Or it could be $2,000 of net new economic value creation. That is just creating a new category of something that did not exist before. So it's not doing disruption. It's doing transformation and fundamental pure innovation. So Bittensor subnets, though, for every $1 that you would invest in time, I would say you could get $10,000 of economic firepower marshaled through the effectiveness of permissionless incentives. Permissionless incentives that reward you for creating continuously improving digital commodities, where you don't have a finite end goal. It's not like, here's my objective and I'm going to solve for that. It's, you want to solve a problem that's an infinite game, that is potentially unlimited in its impact to society and its value.
Well, and again, let's take Targon as an example. So if I'm some kid in Oklahoma and I want to build an AI model that no one's ever thought of before, let's say an AI model to make, I don't know, better lawyers. I'm sure there's AI models for that anyway, but let's just say I have my own unique twist on it. I'm going to use Targon because I'm not going to buy $100 million worth of NVIDIA GPUs to train my model. Let's say I have every legal case that's ever happened in the United States. So I have billions of pieces of text about the law, every legal case, every legal decision that's ever been made. And I want to feed it into a learning model. And I've got my own kind of neural network that I want to test out. Okay, what do I have to do first? I've got to buy $100 million worth of GPUs. But now I don't have to do that. I just go onto Targon and I pay, 1/10 the price I would pay anywhere else to use the GPUs. And now I could build. So I'm creating economic value by building my new AI model that's never existed before. And so Targon, they didn't spend $100 million. I'm the consumer. I don't have to spend $100 million. We're all benefiting economically. Like, how much would you say the creators of Targon put into the creation of their subnet, and now they have hundreds of millions of dollars of value that they deliver?
I would say it's definitely on the order of maybe $1 million, maybe.
In what time frame?
Probably less. I would say over the course of, well, from when it was started, it was at the end of 2023, which was November, I think, of 23. The number of full-time developers that have built the current system, which was launched in February, which is like 6 months ago, is like 5 people. So, I mean, less than $1 million, James, for sure. Less than $1 million.
Less than $1 million. They offer $100 million worth of resources. Can you
it's
imagine?
pretty crazy.
Like if normally in a centralized world, I'm going to build something. Let's say I spend $1,000 to build some machine. Well, now I'm going to offer $1,000 worth of that machine to my customers normally in a centralized world. But now I just with Targon, they spent $1 million or less with 5 developers. I don't know, probably less. And now they're able to offer not $1 million worth of resources, but $100 million worth of resources. And by the way, scaling. They don't have to spend a single dollar for incremental scaling. This could easily go to $1 billion worth of GPUs that they offer without them spending a single dollar more.
Absolutely. And I think, say Subnet 62 is an even more crazy example of capital efficiency. So think about this. Cursor is a startup that had to raise hundreds of millions of dollars, billions of dollars to maintain the ability to economically support $1 billion in revenue, right? Which is basically inferencing their most powerful state-of-the-art. They only have one other competitor that's better than them. It's very ironic, but their state-of-the-art coding AI. It's a programmer AI on your computer or in the cloud, and it codes for you, which is like, wow, that's very powerful. And their accuracy and their performance with the top programmers is amazing. And so they're the fastest growing company in history to $1 billion in revenue. Their number one competitor is Anthropic. A third of Anthropic's revenue is Cursor. And Anthropic also has their own competitive product called Claude Code. Anthropic has raised tens of billions of dollars to produce Claude Code. Cursor has raised billions of dollars to sustain their business and actually continue building their thing. And their models are 76 and 78% accurate on this thing called the SWE benchmark. The SWE benchmark, which is like a test to see how smart the coding AI is, basically, right?
So I just want to understand, like, if I'm a programmer and I'm working on an accounting program at my little company or whatever, I say, hey, give me code for us to make a spreadsheet, and then I want to do these special things with the spreadsheet. The Cursor will code it up, no problem, and it's code that I can easily just cut and paste into my system.
Absolutely. And
Subnet 62.
Anything else. Programming AI can help you build anything you want. A website, a application, an iPhone app. You can customize a form that you want to collect data. Let's say it's a complex form. You want to collect images and text and stuff. And you have like this whole workflow. You want to write that. You'll tell the AI, build me this. And it generates the code to get you to build that app in what would have taken you before days or weeks of your life. If you're a talented programmer, would take you 3 hours or 2 hours. It's insane. The level of productivity. Microsoft has been laying off thousands of programmers. Google has been laying off thousands of programmers. Microsoft and Google alone, it's tens of thousands of these people that would be writing code. They're not anymore because the AI is writing 60, 70, 80% of the code. What does Ridges do? Ridges creates a competition on Bittensor that permissionlessly incentivizes and rewards miners to build models that get better and better and better and better at the SWE benchmark. And they submit these coding agent models to the Ridges subnet, and they hill climb what's called, in computer science, this term is called hill climbing. You hill climb the benchmark leaderboard, right? And they've gone from 0 accuracy on SWE-bench 45 days ago to they just cracked 60%. They just cracked 60%.
So what are the miners doing? Are they developing their own models competitive with Cursor, or is it kind of some aggregation of models?
They're building the AI. They're building the fundamental neural network that represents and trains an LLM that is very good at programming and generating code based on natural human input to the model.
So
in
the
the prompt.
miners, so the miners are coding. They're all collaborating and coding together on one giant model for coding.
There's these evaluations. There's these evaluations that are provided in the competition, and miners provide their results. And the model, the AI on ridges, basically gets incrementally better and better and better. And you can then use that. They cross 60%, James. Claude is 74.5%. Claude Opus 4.1. Okay. I'm going to actually put this in the video share, which I just did. Claude Opus, Claude Code, Claude Opus 4.1 is 74.5% on Sweetbench and 72.7 on the same benchmark, Claude Sonnet 4. Cursor has not officially published their Sweetbench score, but it's around 72% as well. Ridges, which is Bittensor Subnet 62. I just pulled up their Twitter here. This is really incredible, I have to say. Their account is constantly posting updates. This was from a miner called Code Sage, and he achieved 57.3%. And they're just constantly cooking. This is a really amazing team. And they did something really awesome. I tweeted this as well. Anyone with a Google account can mine this subnet. You don't need to understand Bittensor. You don't need to build any other complex kind of interfaces or integrations into the blockchain. You just submit these agents. And the top miners that solve these coding problems are paid over $25,000 a day in the alpha token of Ridges. So it's pretty amazing. They have another tweet that I want to highlight, which shows, actually, you know what? Let's just go to their website. Their website here is really good. I like their website a lot. They have 926 agents published all time. The top score is 57.3%. They're going to be at 60% very soon. Look at the score growth in the last 24 hours. 3%. The top agents here, we can see, are listed. These are the top agents, and they submit results. And this is all very detailed. It submits the result of the problem set, right? And there's full details of the full running of the competition. I mean, this is like so good. This subnet is super cracked.
And so let me ask you a
phenomenal subnet.
Let me ask you a question. If I'm a customer of this, what do I do? So compare the user experience between me being a customer of Ridges versus me being a customer of Cursor.
Cursor uses models and trains their own models to then integrate those models into their application called Cursor. Anthropic trains their own coding models and integrates those models into their application called Claude Code. Does that make sense? So Bittensor produces the fundamental raw ingredient of the technology that you need to then power the applications. Bittensor itself does not produce applications. It produces the raw, fundamental digital intelligence commodity that you then integrate into the application. So what Ridges is going to do, I don't want to spoil anything because I do know them, is they can build an application that competes with Cursor and Claude Code that uses the AI model that the Ridges miners produce. And instead of spending, as I was mentioning earlier, billions of dollars, Ridges was able to get to state-of-the-art outperformance on the benchmark Sweetbench and potentially build a competitive product that is billions of dollars more capital efficient than Cursor. That is very, very impressive.
Let's say they build that app. How does the value of that app get reflected back into Bittensor and ultimately the TAO token?
They need to upgrade their incentive mechanism to create a flywheel between the commercial success of that application that uses that model and the alpha token itself that produces the neural network, right? And all subnets will need to create improvements and develop changes and improvements to their incentive mechanism to keep pace with the rate of improvement of the commodity that they're incentivizing. In other words, as you scale your business and your product succeeds more and more, you have to also upgrade and innovate on your business model. This is very important. So that's what they're going to do. But again, you go through phases. You've got to do things incrementally. Right now, they're incentivizing the fundamental AI neural network, LLM, to get to its state-of-the-art level of capability. And then they're going to start incentivizing the flywheel of the commercial success of the product gets reflected in the alpha token. Could be as a store of value for a subscription or access to that fundamental model, or it could be some type of revenue flywheel. There's lots of different ways of slicing that.
There's a lot of really interesting points here. Like one is, let's say they just take this app and they forget about all their miners and their subnets. They build this app that's better than Claude, better than Cursor, and they start selling it and they IPO for billions of dollars, and none of that value gets reflected back into Bittensor. The problem there is that they have competitors, and the competitors are spending billions of dollars to get better and better and better. So ultimately, they're either going to have to go back to Bittensor to improve their model, or they're going to have to spend billions of dollars, which they don't want to do because they have a culture of already not doing it and getting better results. So there's incentive for them to improve their incentive mechanism, because they have to keep improving their app. They have to keep improving their models. And the only way for them to do it is through Bittensor. And the miners are only going to stick around if they see a multi-billion-dollar app being created. They're either going to stick around because they're incentivized by that multi-billion-dollar app, or they're going to work for another subnet where the incentive mechanism is better.
I think I roughly agree with what you said, but I would push back ever so slightly, and I would say I think you missed a couple things. The one thing that you missed, which is really important, is the pace of improvement in AI is the only thing that matters. That is the only thing that matters. The pace of improvement in AI is the only thing that matters. That is a constant. That is not a variable. That is a constant. So in a world where they IPO, they get this better competitive product, they make $10 billion. Okay, they make $50 billion because the world's just like, the numbers are just like way bigger. These days, all the numbers are just fucking huge. They make $50 billion, they don't pay that back to the Bittensor subnet. By the time that they're even remotely able to do that, their dependence on the continuous improvement of ridges is fundamental. It's fundamental. So to your point, the necessary deep flywheel of capital injection and liquidity into the alpha token of ridges will be infinite in correlation to the improvement of the model, in correlation to the improvement of their coding model. This Swebench thing is a joke. That's a toy. Why would you stop at Swebench? What Ridges is going to have to do very soon is, after they fully saturate Swebench, they will need to write their own benchmarks that transcend current human understanding of God-level programmer AI models, right? And that's kind of what they're going to have to do.
So here's the interesting thing they're proving. They're proving that a scalable system like Bittensor, where we've used the word permissionless, anybody from around the world can suddenly contribute their AI knowledge to improving ridges. That's permissionless. You don't need to be hired as an employee at Anthropic to use your AI knowledge. You could just sign up for ridges. So this scalability, they could have access to 10,000, 20,000 of the best AI minds on the planet without even knowing them, permissionlessly. And whereas Anthropic has to use the $5 billion they raise or the $10 billion they raise to hire the 200 best programmers they can hire, or the and that's ultimately, if Ridges passes them, there's no way they can catch up because the scalability goes exponential. Like, it's done. So that's a done thing. And to your point, the pace of improvement in AI is so fast that if Ridges doesn't figure out the incentive mechanism so that, hey, their $50 billion app can keep growing, they're just going to lose, because some other subnet will start up the next day and all the miners will move over and boom, they'll create a better model within seconds or days or whatever.
Another thing is that subnets compete. So there could be 5 or 6 competitors to Ridges, in the same way that when we created the category of mining other networks, aka decentralizing the Bitcoin hash rate through Subnet 14, now there's like 2 or 3 really crappy competitors that are just copying some of the original ideas that we've already moved on from. And we've improved and changed our incentive mechanism multiple times for TAO hash. And we're extremely optimistic about scaling that massively. Ridges could go through a similar, I don't want to jinx things, but Ridges could go through a similar evolution where they go maybe to number 2. They maybe go number 1, and then they crash really hard. And it's a valuable learning lesson for the team and for Shaq and his colleagues to iterate continuously. And remember, Jeff Bezos has a famous quote when everyone was telling the news and the writers were saying Amazon.bomb. Amazon.bomb.
Famous Barron's cover in 2001.
And what did Jeff say? He wrote his company update letter to all of his employees. And he said, listen up, everybody. Our stock is not our company. We are long-term focused on innovation and executing in a disciplined manner and compounding on our progress every year, every decade, forever. It's always day zero. Day zero. Customer obsessed. Focus on the customer. Wow. Okay, that's all that Ridges needs to do. If Shaq does that, all of the competitors will not matter. None of them will matter. And it's really crazy. So few founders do this. So few founders do this. You know what a lot of founders do though, James? They get googly eyes whenever they see a little bit of money come their way, and they get super lazy and they get complacent and they pull back and they stop being extremely excellent at executing. It's so common. And unfortunately, it's kind of a disease in the last 10 years because of the absolute ballooning of venture capital going from a $100 billion asset class to a $2 trillion asset class in the last 7 to 10 years, mostly a ZERP phenomenon. And it's really sad to see.
It is, because it ruins, what it does is it ruins the incentive system. Like, it skews the incentives. Like now, rather than being incentivized to create a great product, I'm incentivized to live in Silicon Valley, go to parties where venture capitalists are at, start a Me Too product, get some initial progress, and then flip the company to someone who's also VC funded, so they have a higher capital value than I have, flip the company, and then go on to the next thing. And now I'm a successful entrepreneur, quote unquote. But here in the Bittensor system, I almost don't like the word money, because everything is powered by incentives. The miners are incentivized. The validators that check the miners' work are incentivized. The subnet is incentivized to create the subnet because they're going to try to create a product or a company out of it. Even the customers are incentivized to use to buy TAO tokens to use Bittensor because that's where the better products are. And so it's all about incentive mechanisms, and we're not thinking about how to pay the miners more money. You're thinking about how do we create better incentives for the miners? Like, oh, maybe we tie them to future revenues of the app. Maybe we tie them to future equity of the app. And by the way, because of how Bittensor's set up, every subnet has its own set of tokens. Like Ridge's token is a crypto token, just like Solana is a crypto token. And I could go on whatever DeFi exchange, like Base or Solana actually, and I could buy the Ridge's token. And a bet on the Ridge's token now is not necessarily a bet on the equity of Ridge's, which is also an interesting thing, that you're not necessarily betting on the equity, but you're betting on the fact that they're going to have to keep reinventing their incentives so that maybe the incentives of the Ridge's token are even better than owning shares of Ridge's. Maybe it's like equity plus a revenue share or whatever.
I would say all of that is so true and fascinating. I would add a couple things. I would say the alpha tokens will be very easily accessible for retail on all the top exchanges. Coinbase, Kraken, everybody, for sure. Maybe TAO app won't matter. Maybe we shut down TAO app or something. Because like Brian Armstrong and CZ at Binance, those guys have trillions of dollars in volume, trillions of dollars, tens of trillions of dollars actually. And of course, they're going to adopt a framework that allows their customers who transact and trade all of crypto, which is a $4 or $5 trillion asset class, to say, of course, Bittensor is going to be this kind of, in your words earlier off camera, sort of S&P 500 for AI. You'd want to support that kind of asset class. But here's the interesting thing of the alpha tokens: they are deflationary scarce, and modeled after Bitcoin. They all have 21 million unique and finite supply. So there will never be more than 21 million of alpha tokens per subnet. And they inflate a little bit faster. There's an EMA that speeds it up a bit, depending on how fast people stake into the pool and how old the pool is. All the pools are very young. Right now, all the pools are 6 months old, right? We need a little bit more time to see these things mature. But very similar to like looking at the first few years of Bitcoin. Like, had you discovered Bitcoin in the first 4 years before the first halving, your average cost basis would have been $20. If you were in the first 2 years, your average cost basis was $2. If you were in the last 2 years, your average cost basis is like 20 to $50. You know, pretty crazy. So these alpha tokens, they are essentially the Bitcoins of the commodities being produced. So the Bitcoin for Ridges is the alpha token of subnet 62 Ridges. The Bitcoin for Targon for subnet 4 is the alpha token Targon subnet 4. Each one of these they're like little mini Bitcoins that have similar characteristics as actual Bitcoin has for disrupting and replacing fiat currencies. But they're not really currencies in terms of how you would use them as like a replacement for the dollar or the yen or the renminbi or gold. What you use the alpha tokens on Bittensor for is, instead of payment currencies, you use them as stores of value for the digital commodity itself, for the continuously improving production of the digital commodity itself. And those stores of value, if the subnets on those currencies execute continuously, and they build ecosystems that collectively mine that intelligence, in the same way that the Bitcoin network has one incentive mechanism called produce SHA-256 hashes. Produce the SHA-256 hashes. That's the incentive mechanism on Bitcoin. Humanity produces those hashes. Hash rate goes up more. Before you know it, the hash rate costs billions of dollars in electricity, tens of billions in electricity. What's the incentive mechanism for Bitcoin actually saying? It's saying, invent better chips, invent better energy production mechanisms, invent better, ASIC designs for actually doing the bitwise operations that compute SHA-256, because it's not a floating point mathematical operation. SHA-256 is a bitwise operation, which means it's more like time series, like signal processing. Signal processing applications use bitwise operations at the register and instruction set level, at the chip level. And they're very compute inefficient at certain levels, but they're very simple instruction sets. So you can design chips that just execute those instructions. Jack Dorsey announced a new one yesterday called Proton, right? There's a company in China that makes most of the ones that everyone uses. They're called Antminers, and the company's called Bitmain. So each Bittensor incentive mechanism, it needs to be designed in a similar way that Satoshi very carefully and thoughtfully, in collaboration with the open source community, by the way, designed the incentive mechanism for Bitcoin and the SHA-256 hash functions, but also not just the competition, not just the incentive mechanism, also the agreement method, the governance model, also known as the consensus mechanism. The consensus mechanism. How do you come to agreement on what was competed on the subnet? How the competition occurred, who the participants were, how the ranking works, how the validation works. What are the ceremonies? How often do you perform the ceremonies? What's the frequency? How do you scale the incentive mechanism? And also, is the consensus, the agreement layer, the consensus mechanism, is it hackable? Is it exploitable, right? The degree to which you have to really deeply think about these things to create a multi-decade scalable system is actually not far from the degree to which Satoshi, whoever they were, alien, man or woman, we have no idea, came together to create this thing. And really, that's what I would say would be the challenge to all of the subnet owners, is to raise the bar of excellence that you apply to the design of your incentive mechanism and your consensus mechanism on each one of the subnets.
See, this is why Bittensor ultimately, I think, is more interesting than Bitcoin, because Bittensor is very Bitcoin-like, right? The 21 million tokens, the halvings, the incentive mechanisms, the consensus mechanism, everything's like Bitcoin, except it abstracts away these very specific incentive, the incentives offered. So you get the subnet owner, and Bittensor itself too, but let's just say the subnet owner, they get to design their incentive system. Bitcoin, that incentive system is fixed unless there's like a fork in Bitcoin. So this is what ultimately gives Bittensor more value, I think, than Bitcoin. If a subnet basically said, okay, we're going to incentivize miners exactly the way Bitcoin does, then that subnet is replicating Bitcoin. But then there's every other subnet now, and they're all part of TAO, ultimately. They're all part of the TAO ecosystem and the TAO token. So every subnet can basically not only define their own incentive mechanism, like you said, they could upgrade their incentive mechanism when they realize, instead of like kissing ass to VCs so they could raise money and hire employees, they can spend time thinking about the product they're building and how to incentivize the best ways to improve that model, and they can upgrade their incentive mechanism. Bitcoin can't do that. So Bittensor is like Bitcoin plus. And I almost feel like when I say this, I feel like I'm shilling Bittensor. But what you just basically said was you just said Bitcoin and you defined it. And to me, that strikes me as that you just defined one subnet within Bittensor, and there's all the millions of other subnets you can now create within the TAO token. So that's the amazing innovation, is that incentives are now abstracted out, bigger.
Yes. I mean, I would pose the question to you, James. Which is more valuable? YouTube, but all of the content is just produced by one group of people, like a studio, and it's infinite content, but it's produced by one group of people. Or YouTube in its current form, which is that anyone in the world can permissionlessly upload and create content on that thing. Which is more valuable, James? Which one?
Well, definitely YouTube. And you see this where the TV networks are going out of business, and like Larry Ellison's son just took over Paramount. Like the centralized media content industry is basically just being taken over by the children of billionaires who this is like their hobby now. And so I'm not criticizing, I think his name's Dan Ellison. I'm not criticizing him. Maybe he'll make wonderful movies and we'll all enjoy them. But YouTube, I could watch for 100 hours a day if there were that many hours and not run out of content that I want to watch. A great example is there used to be 5 major book publishers: Penguin, Random House, Simon & Schuster, HarperCollins, maybe 1 or 2 others. And if you wanted to publish a book, you had to get their permission. Like, please publish my book. Give me $2,000 advance and a horrible deal just so you can publish my book so I could tell my friends I published a book. Like, that was the book publishing industry. And then Amazon in the early, and then there was this other side of the book publishing industry that was very ugly called vanity publishing, which is, all the publishers rejected me, so now I'm going to pay somebody, to publish, to print every one of my books so I could then, sell them door to door or whatever. But then Amazon did this amazing thing. They said, hey, we're going to create Amazon Kindle self-publishing. So you can upload a document with your book and we'll print it. We'll make an ebook of it. We'll make a hardcover book of it. We'll make an audio book if you upload the recording. And you could call yourself James Publishing Inc., and that's the publisher of your book. And it's published on Amazon, and it's right next to all the other books. And then suddenly, more books were published this way than were published traditionally. And by the way, everybody kind of looked down their noses at it, and they said, they're probably worse. The quality of the books are worse. Well, it turns out that the average ranking, people review books on Amazon, the average ranking was higher than for the self-published books than for the traditionally published books. And the average sales number was higher for the self-published books than for the traditionally published books. It was like this amazing experiment in, making permissionless book publishing. Had nothing to do with crypto. It was just permissionless book publishing. I've now published about 50% of my books traditionally, 50% of my books through this way. And I will tell you, my best-selling book was called Choose Yourself, published in 2013. Has sold over 1 million copies. None of my traditionally published books, if you take all of my HarperCollins and Random House published books or whatever and add them all together, it won't come close to 1 million copies, which was one of my self-published books. So
Wow.
so that's the power of having this kind of decentralized and permissionless mechanism. So now that was for books. And by the way, Amazon also does it for video too, which most people don't know. If I make a TV series, I can upload my TV series and it's right next to any other TV series on Amazon. And by the way, I've done that. I turned Choose Yourself into a TV series and shot about 8 episodes. Thank you, Nick Nanton, the producer of that and director of it. And I uploaded it to Amazon, and it looks like any other TV series on Amazon. And when you search for it,
Wow.
but what Bittensor does is that does it for everything, every possible like mental commodity, digital commodity is essentially decentralized in that same way. And Amazon, every time you see it, YouTube, you see it with Amazon, every time you do something like this, it always scales bigger than the original centralized versions.
So much bigger. So much bigger. I mean, when you make things permissionless, honestly, Google search is actually a pretty damn good example. I just think that the way they make it sustainable is unfortunate. But what Larry and Sergey did, which is really incredible, is they said, let's organize the world's information. Let's make it really fast and easy for anyone to discover the sum totality of human knowledge at their fingertips really fast, for free, instantaneously for free. All of it, all the information, no censorship, just a little bit of censorship. And that's permissionlessness. That's amazing. That's really incredible.
Right. Like if I make a website, I don't need permission to be listed on, like Yahoo in 1996 had a directory. You needed Yahoo's permission to be on their index. But with Google, their web spider crawls everything.
But I mean, think about the economic impact of making the world's information instantaneously available to like billions of people with very high reliability, by the way, and an amazing service for decades. Wow. I would have to say Google is undervalued, massively, massively undervalued. They should be a $50 trillion company or a $100 trillion company. They're only a measly $2.5 trillion company. How do I know they're 2.5, by the way? Bitcoin is now worth $2.5 billion.
Trillion, yes.
Sorry, 2.5 trillion. 2.5 trillion.
Yeah, it was
Google's
in the headlines.
Google is worth 2.5 trillion. Bitcoin is now worth 2.5 trillion. That's amazing.
It is. And again, going back to your example of ridges, it's this idea that you could take any digital asset, any digital idea, like, okay, let's make something that codes, uses AI to code. You could take that and not thinking about money, just thinking about incentive mechanisms, you can create something better than or about to become better than the entities that VCs are spending billions of dollars on. And the entrepreneurs beg the VCs to fund them. It wasn't permissionless. It's please give us permission to spend billions of your dollars. And the subnet owners, I don't know who they are. You know who they are. I don't know who they are. They said, oh, we have this idea. What we have to do, our work is a little bit of software to hook everything up. And we have to give incentives to the miners, give incentives to the validators, and boom, we're going to create a better AI model than one that people spend billions of dollars on.
You know, when you say it like that, venture capital really sounds like a Ponzi, James.
Well, okay, I'll tell you what, it partly is. What they do is, what a lot of VC firms do is, and this works with private equity firms, hedge funds, VC firms, is, let's say I invest in Joe's company. So Joe's company does around at 10 million, then later it does around at 50 million. Well, now I tell I'm pitching new investors on my new fund, I'm up 5 times on Joe's company. He hasn't sold his company yet, but he raised money at 50, so my investment is up 5 times. And so now I'm going to raise $1 billion fund instead of a $10 million fund. And who cares if Joe's company fails later? Okay, I've got my $1 billion fund that I'm making, by the way, 20 million a year on basic fees off the top, and then 20% of all the profits. Hedge funds work the same way. Private equity firms, a lot of them, it's not just the Madoffs. There are a lot of Ponzi schemes out there. I don't know if they're ever going to fall. There's infinite amount of money, it seems, funding these things.
I think the GPs are the best salespeople on the planet at selling their Ponzi games and basically jerking off each other's funds. That's pretty much what's happening. I mean, I excuse the sort of explicit language there, but I think that it's a tight old boys club, old-ish, there's plenty of them that are a lot younger, 30s and 40s, but most of them are, it's mostly sort of like the archetype is it's like closed off, closed doors, tight knit group of like 5 to 10 funds. I can name them. I won't, because I don't want to get banned in Silicon Valley,
Right.
but
Because you need permission. You need
because
permission to live.
I need permission. Just the fact that I say that as a participant in the ecosystem is kind of sad. And so I just choose to stay away from it. I just don't work with any of those funds directly. Like at the stage that I like that, I'm happy to have them invest after me. Like that's okay. Sometimes we prefer that to not happen, to be honest, actually, in any of our companies. But if they must, and if the founder's like, okay, I'll take your money, then it's okay. At the stage at which we invest, we almost never co-invest with one of those funds because I don't respect them. I don't respect them at all.
Yeah, and also you see this in the equity markets all the time. Public companies do deals with well-respected private equity firms or hedge funds or whatever, and then 30 days later, the stocks spike down because those hedge funds propped up the stock a little bit and then sold when they were legally allowed to. It usually takes 30 to 60 days, and that's why you always see that's why stocks tend to go down on a financing, because everyone knows the hedge funds are going to dump it as soon as they can.
Yep.
They're not really on the same side as the entrepreneurs or the management team or the employees.
There's no incentive
or even
alignment.
The shareholders. Yeah,
there's no incentive alignment. There's no incentive alignment. That's critical. That's critical.
And this is the whole point. This is the problem really that Bittensor solves, is it forces incentive alignment. Like you can't have a subnet if there's no incentive. To your point, you were making the point about Ridges, is that Ridges or any subnet could fail if they don't properly incentivize. They have competitors already on another subnet within TAO, and if they don't keep being creative about their incentive mechanism, the miners will leave and their assets basically walk out the door.
That's correct. Yeah, I mean it's really to use the great Charlie Munger's quote, show me the behavior and I'll show you the incentive. If you want great, long-term, sustainable, incredibly profoundly positive impact to society for generations, you better damn get the incentives right. But if you get them wrong, even a little bit, all of those things will suffer.
And again, we don't have to use the word money. Incentives is a broader, that's why I hate the word capitalism. It's not about accumulating capital. Capitalism comes from Karl Marx, basically referred to it in Das Kapital. But I love the word incentives, because think about government. A governor of one of the biggest states in the country once told me, the way it's easy to govern a country or a state or whatever. All you have to do is two things: incentivize the behavior you want and disincentivize the behavior you don't want. You don't want people to smoke cigarettes? Put a tax on cigarettes. You want people to, have clean energy? Then reduce taxes for people using clean energy. And then you can see, which incentives make an economy better with lower crime and so on. Like that's how you can tweak things. So, which I always liked as a model of government, but also a model for incentivism, which is what ultimately we live in this economy of incentives, not of money, because some of the incentive, like you mentioned with open source, I didn't get money for changing an open source program, but I got some clout in the community, and I got some career satisfaction or career benefits or whatever. So there's more benefits there's more incentives than just money.
I think that the incentive is the currency, not the other way around. So when you say the currency is the incentive,
yeah, right.
Yeah, when you say the currency is the incentive, people, just like to your point earlier, people are like, oh, I've got to get a certain amount of net worth or a certain amount of income or a certain amount of equity or a certain amount of cash or a certain amount of earnings or whatever, and that's wealth. No, the reality is if you optimize for incentives being aligned, that is in and of itself the reward. The incentive is the reward. And so TAO and the alpha tokens on Bittensor are not currencies. They are the incentive. They are the thing that creates incentive alignment. Therefore, You want to invest more in that thing that creates incentive alignment. It's a store of value for incentive alignment, is basically what it is. It's not a currency, but it's a store of value for incentive alignment. And it's a language for writing those incentives.
It's so interesting because when I was first getting involved with Bittensor and TAO, I was wondering, why would I invest in a subnet? Why would I invest in a subnet's tokens instead of their equity? I've always been an equity investor. Like, I want to own a piece of the company. But in this conversation, you just changed my thinking completely, which is that the subnet owner is ultimately going to have to make their incentive mechanisms just as good or better, even better than if I owned equity. Hence, it might be worth buying these incentive mechanisms, these tokens, when they're cheap. Now, if you believe in the subnet's management, if you believe in the product that the subnet has, by the way, this is why it's really important to invest in good management too, because it's the good management that creates the incentives, not the product.
You invest in great people. Bittensor is simply a superior mousetrap and method for investing in better people. Like, that's just the reality. I'm sorry. No, you don't need to overcomplicate it. Don't AI, ML. Oh my God, this is complicated. The developer docs are hard to read. You don't need to understand any of those things. Bittensor is a better way to get the best people in the world working on a problem in the most effective possible manner, period. That's what Bittensor is. Okay, the world changes really slowly. There's a delicious place I go to for a half chicken sometimes near my house. And the owner is this lovely Turkish gentleman, Burke, and they make the most amazing half chicken there. I'm not going to dox myself though, so I'm not going to mention it. He was like, "What do you do?" Because I'm like a really intense person. I'm always like, focusing on eating my chicken and then getting out of there because I got to get back to the office. And so I explained to him, I lost track of time. I spoke with him for 2 hours straight. He was like saying no to customers and stuff. And we talked about Bittensor, of course. And he was like, I understand, because I came from Turkey as growing up, a child, and as an adult experiencing hyperinflation. And we had to use Bitcoin to send money to our family. And because our currency, the Turkish currency, was getting so massively devalued because of hyperinflation. And he was like, I understand Bitcoin. And what you're saying is Bitcoin makes a deflationary reward possible for creating an alternative to fiat. Bittensor is creating a deflationary reward as an answer to centralized monopolistic AI compute and AI services. Wow. So he totally got it.
And what's interesting is I like the word deflationary here because a lot of times people ask, here's a very basic question people ask, and we've discussed this before. I forget if we've discussed this on the podcast or offline, but Facebook is supposedly creating these enormous pay packages for AI engineers, like $100 million pay packages. I don't know if that's true or not, but let's just even say it's true.
It's true. It's true.
It's true. So look, and then the question is, how does decentralized AI like TAO, Bittensor, compete with that? But you kind of just answered it, is that no matter how much money Facebook throws at engineers right now, ultimately the deflationary aspect of Bittensor will scale up enough, it'll compete with that.
I completely agree. And I think it's for one specific reason. I tweeted this a few days ago.
Now I understand it, by the way. I didn't understand it when you tweeted it. Now I understand it.
Okay. So let me explain this to people because I put tweets out without context. I just saw my tweet fanatic. So infinite incentives are deflationary incentives. Finite incentives are inflationary incentives. What does this mean? Allow me to elaborate. When we say an infinite incentive, what we're referring to is something without a cap. It can go forever. It has no time limit. It is not coupled to one person's lifespan, for example. That's infinite. And why deflationary? It's because they transcend the boundaries that humans create using the conventional tools of capitalism, like companies and stocks and equity. So that's why infinite incentives are fundamentally deflationary, like Bitcoin, where you have a finite supply and halvings, divisibility over potentially millennia, but certainly centuries, many centuries, right? How many companies have transcended centuries? Very few, 10, maybe. Finite incentives are inflationary incentives. Let me unpack that. Finite is a company. Finite is a corporation. Finite is a human. Finite is a technology market. You're focused on this market. You want to get more share of that market. The market sets the boundary conditions for the game. The market constrains the game. One market allows you to be one dominant thing in that one market. It's constraining. It's inherently limiting. So finite incentives adhere to all of those types of constraints. Why are they inflationary as opposed to deflationary? Why are finite incentives inflationary? Because when you have equity or when you have a stock, you can print more of it when we do it all the time and it's normalized, and let's keep money printer go burr on my cap table equity, on my common, on my preferred, on the stack of preferences. Let's just poop some more shares. How about we just poop some more shares today? No problem. Pooping more shares on the way. Everyone does it all day long. So you have no discipline. You have no supply. You have massive dilution. And you have what's called hopes and dreams and stories.
And this is a really good point. I want to make sure people really understand the examples you're saying. So like, for instance, let's say I have an employee and I want to incentivize them with equity in the company. So I give them shares, $100 million worth of shares and some cash. And so now I've got one great employee who I've incentivized. Well, now my competitors, they also issue $100 million in stock and cash to their best employee. So now I'm like, uh-oh, I can't compete with them anymore. So I've got to issue more shares to bring on the next employee. But now I have too many shares. When you have too much supply, you reduce the value of each one element. That's why when there's so much money printing, the value of the dollar goes down. A dollar doesn't buy you a hamburger anymore. It only buys you half of a hamburger.
Your purchasing power goes down.
Your purchasing power goes down. So that's a finite incentive. When I'm paying somebody a salary, ultimately someone else can compete by paying someone a higher salary. So now I've got to figure out, well, how do I get more cash? Oh, I issue more stock, and now I can pay. So it doesn't automatically happen, but over time it could happen that these finite incentives become extremely inflationary. Whereas, let's take the case of Ridges. I might have 100 miners that I'm incentivizing to make new AI models for coding, but I can also have 1,000 without really changing my incentive mechanism. In fact, I can't increase the supply of my tokens. It's fixed at 21 million
Correct.
in the lifetime. So
Correct.
So the value of each token is going to go up, and that's what it means to be deflationary. Is when $1 buys more things, the price of everything else went down versus the dollar.
Yeah, no, 100%. 100%. The purchasing power of infinitely improving and permissionless and decentralized and incentivized and fully open source and continuously improving. I said improving twice. That's okay. Intelligence commodities is going up forever. There is no boundary to that. The purchasing power of everything else is inferior to this. Maybe with the exception of Bitcoin. But again, I would argue Bitcoin falls into that first category. I would say Bitcoin is an infinitely improving digital commodity for a medium of exchange and a store of value currency, a replacement to fiat, The total addressable market for Bitcoin is maybe $100 trillion, maybe $200 trillion. But I don't think it stops there. I think it could actually go to greater heights because the way we monetize things and represent them using currencies is an ever-expanding universe. We can't just go and just take the TAM of the dollar and the TAM and the value of the currencies combined and say, okay, $100 trillion, that's the maximum Bitcoin could ever be. That's kind of silly. I would say it's a lot more. But for Bittensor, it's not just replace fiat. It's replace centralized AI. It's replace inferior incentive mechanisms for things that do not actually produce the digital commodity properties that Bittensor produces, but they do it using 10,000 times or 1 million times more capital. And so that creates capital inefficiency. And so I think Bittensor is quadrillions of dollars of a total addressable market, because it is the sum totality of all possible incentive designs that humans could engineer, which produce the sum total of all markets, which produce the sum total of all derivative markets, which produce the sum total of all of equities and representations of value in terms of, basically equity assets.
And you know what's funny, when you say quadrillions, people are going to listen and say, well, that guy is smoking crack or something. Like, how do you put a Q there? But I will draw the real world analogy. So Bitcoin has, there's various incentives in place for it to be used as a currency. And you use the word derivative. Well, every AI model right now, every AI company, every company is built on, using currencies. Like your customers pay currencies, your shareholders pay currencies, you pay currencies to build your product and to pay your employees. So a company is really a derivative of currency. And then, of course, you have stocks, options, bonds, loans, all these other things that are derivatives of your basic currency transactions. So Bitcoin is treated like a currency. But Bittensor, because it abstracts the incentive mechanism, that basically becomes everything that could possibly be derived from incentives. So whether it's another company or employees or equity incentives or revenue incentives or whatever. And the size of currencies on the planet is $150 trillion. There's $150 trillion worth of fiat currency on the planet. But the number of financial derivatives of all the currencies, which is all the stocks, all the bonds, all the mortgages, all of financial derivatives of fiat currencies is $1.4 quadrillion. And so I would say Bittensor is to Bitcoin what all financial assets and derivatives are in the world is to fiat currency. And that's where you do get legitimately a quadrillion dollar number without being like ridiculous. It's not ridiculous. There is that does exist on the planet.
I think everyone's laughing at Sam Altman right now and saying, you're not going to be investing trillions of dollars in building these data centers. I think he's definitely going to be investing trillions of dollars in building the data centers. I actually believe that. I'm sold. I don't like the guy, and I think that the way that they build OpenAI is, not the way I would do it, of course, but I think that they're going to get that money. And that's the thing, is people do not have the imagination required to see the future because they do not understand exponentials. When you see something going exponentially, it's very hard to develop a model of the world perspective 2, 3, 4, 5, 6, 7, 8 years out. Most people would have thought Google would be $100 billion company. Oh my God, maybe 200 billion dollar company. Do you know how much Palantir is worth now? Palantir is almost worth $500 billion. $500 billion. Palantir. Congratulations to Alex Karp and team. Wow. Very impressive performance. NVIDIA, people would have thought NVIDIA would be maybe a $20 billion, $30 billion company. By the way, they were 3 years ago. They literally were 50 billion or something like 3-4 years ago. Actually, maybe 2.5. $4 trillion of equity value created in, 3 years. Wow. Holy shit. I think people don't understand how big stuff can get. And I think that Bittensor is undervalued by 5 to 10 times currently. And I think that it can get to 2.5 trillion of value, which is where Bitcoin is after 16 years of a protocol, multiple halvings. I think Bittensor can do that in half the time. I think you can do it in half the time.
I agree. And I'll give you a very specific real world example of this happening, something like this happening. So back in 2007, Microsoft or Yahoo, I forget which one, Microsoft offered Facebook $1 billion, offered Mark Zuckerberg, I'll give you $1 billion for your company.
Yep.
Mark Zuckerberg was 24. He could have made 250 million. He owned about 25% of Facebook at the time. It was a private company. And I went on CNBC and I wrote an article for the Financial Times. And I said, absolutely, Mark Zuckerberg was correct in rejecting this because one day Facebook is going to be worth at least $100 billion, if not $1 trillion. And I went on CNBC like that week, this is in 2007, and literally they had a recording of Jeff Bezos laughing because he had this awkward sort of laugh, and they just kept playing that on repeat while I was talking because they just thought it was so ridiculous that I was saying, Facebook had just been offered $1 billion. Why would it be worth $100 billion? And it was because of this network effect. Like, people don't understand that networks grow exponentially. And on the day Facebook IPO'd, CNBC, to their credit, had me back on and apologized because it was going public at a $100 billion valuation. Just 4.5 years later, 5 years later. That's why people don't understand. Oh, what are you talking about? Like, maybe it goes up, maybe TAO goes up like any other financial asset, like 20%, 30%, whatever. But they don't understand. It's an exponential network effect asset. And we've discussed this before. It's not even a network effect. It's a Reed's law effect, which is a network of networks grows even more exponentially. And so how do you make money on this? Like, Facebook was a private company at the time. You couldn't, just because I was predicting Facebook was going to be worth 100 times more within a few years, you couldn't invest in Facebook. It didn't do anybody any good. But what I did was I invested in every marketing company that was transitioning corporate entities to Facebook advertising instead of traditional advertising. So I invested in a bunch of these and made some money as they all got sold, over the years. Same thing here now. Unfortunately, now you can invest in the quote unquote Facebook. You can invest in the TAO token, or you can invest in the subnets. And I'm not pushing any of this stuff. I actually, personally own very little of the subnet tokens. So I'll probably do more, particularly after this conversation. But I definitely own TAO through, my company TAOX, which is a public company. I'm proud that I've been able to set this up so that anybody could buy TAO through the public markets. But now there's fortunately more ways to invest in this kind of exponential growth.
Yeah, it's really, I think it's really remarkable. There's a couple trends right now that I'd like to point out. One is mainstream America, the middle class, lower class, is totally left out of this absolutely gargantuan wave of capitalism playing out in AI, in technology markets, and these types of things. And on one hand, you have Brad Gerstner creating the Invest America Act with Michael Dell's support that just passed in the Big Beautiful Bill. And that's creating an investment account for every child at the point in time that they're born in the country to have exposure to the stock market, to the top technology stocks. And it's
really,
locked
I didn't know
up.
that.
And the government supports it, and it's passed Congress. And Brad's been supporting this for years. He's been pushing to get it passed.
How much money is put in the account of a newborn?
I think it's a few, either a few $100s or a few $1,000s. I can't remember, but I think it's moderately reasonable. But if you compound that, right, and you lock it up for 18 years, the amazing thing about America, like Warren Buffett says, is that this is the place to invest in. You want to invest in the long-term prosperity of America's ingenuity and technology ecosystem and innovation and all the markets we're creating. And so I think that's a really beautiful thing. But I think that mainstream America currently, adults, they feel very left out of, the value creation of OpenAI, as an example, right? So it goes from 0 to $500 billion valuation in a few years. Well, if I'm an American and I'm hearing about all the AI stuff all the time, maybe I'm using ChatGPT and I'm like viscerally realizing how powerful it is because I use it. It's a great tool. I don't use ChatGPT, but I'm saying like the average American that might be using it, you're thinking, wow, this Sam Altman guy is kind of creepy. It's like all these geniuses, they're making this ChatGPT thing is like so powerful and I use it every day. But like, you're paying them money, right? Like, and they're making a huge amount of money. They're also really kind of upside down on their business model. But guess what? Venture capital is happy to subsidize their horrible unit economics because they have massive negative gross margins, just like all the other companies, right? And so, but venture capital, remember, $2 trillion asset class. So we are going to fund your horrible upside down unit economics until the cows come home, as long as you keep growing user acquisition and revenue. And so venture capital has basically been the culprit and the villain for sort of cutting out most of the American economy and people from participating in this astronomical technology industry at the earliest stages. Not at the public market stages, but at the earliest stage. So from when you go to the seed round all the way through to the IPO, that's about 100x. Google went public at a 20-ish billion valuation. You know, their seed or Series A was at around 100 million valuation for Google. They did a round that was much lower valuation before that, but the Series A, led by John Doerr and Kleiner Perkins, was at 100 million valuation. 25 million on 100, or sorry, 12.5 million on 100. So they bought like 10% of the company. And I think 3 years later they made 200 times their money or something like that. 3 years later, 200 times. 3 years later. Years, people. 3 years. 200 times their money. The average American could have bought the Google stock. High conviction. Putting 50K in, putting 25K in, high conviction. You would have had to wait 20 years to see a measly 100x. The VCs got 200x in 3 years. Remember, 3 years. Mainstream America could only get 100x, but you got to wait 2 generations. Why? Oh, seems like a good deal. Seems like a really good deal, right? Really shitty deal, actually. Really shitty deal.
I mean, you're right. Like it's so unfair to the average American, the VC system. That's why having, again, it always sounds like we're just trying to like show Bittensor and TAO, but it's true. Like subnets start from scratch and they're equally available to all of us to invest in the second they start. Like there's no BS rounds beforehand. There's no like, even a lot of cryptos, by the way, this is not an endorsement of all crypto. A lot of cryptos do these airdrops on influencers and look, I've invested as a VC in some seed rounds of coins, and you get extra benefits. You get extra tokens before everyone else does. And it's not fair. It does not happen. I would say a good example, leaving Bittensor out of it, a good example of a crypto that did not have a VC round was Hyperliquid, HYPE. And as a result, you don't see any big funds like dumping Hyperliquid tokens. Hyperliquid became the fastest growing derivatives exchange in the crypto universe. It's a legit token where there's not like a lot of manipulation around. And Bittensor TAO is similar. No like BS in the beginning, no huge airdrops, and it's able to grow organically.
I threw a spreadsheet together 3 days ago that actually dig into some of the details of what you just said, James, which is, did the project raise venture capital? Or did it have an unfair launch? What does an unfair launch mean? Just to kind of explain this to people. An unfair launch, as opposed to a fair launch, is one where everyone has the exact same equal access to the opportunity. Without any insiders and airdrops and like an ICO that only 1% of the world knows about, right? This spreadsheet that I created a few nights ago was done over the course of the evening of August 11th, and it was mostly done by hand. I had to pull a lot of these values off of the internet. There is no spreadsheet like this in the world. I created it from scratch. I love creating little spreadsheets like this every time I'm curious about something. The AI helped me just a little bit. This is the list of every cryptocurrency, not including wrapped or staked assets like wrapped BTC or wrapped ETH or whatever. So we take those out. It's about 30 assets. And everything is currently valued more than Bittensor TAO. So Bittensor TAO is at the bottom of this list. If I go back to the sheet, the most valuable asset in the list is obviously Ethereum. Everything not including Bitcoin, right? Everyone not including Bitcoin. The most valuable thing is Ethereum. The second most valuable thing is actually Tether. XRP. XRP is funny. XRP, 187 billion. And then we've got Tether in there at 164. And we've got Binance BNB at 113 billion, right? Solana's at 95 billion. This is a few days ago. So what am I looking at here? I'm looking at a few things. I'm looking at, did the project fairly launch? This is so interesting.
I didn't know this.
The entire fucking list. The entire list. The answer is no, except for Monero, which is a privacy cryptocurrency that is completely untraceable. It is actually used by a lot of criminals, but it's also really cool. I think Monero is really, really interesting. Unfortunately, Monero just got 51% attacked. So it's a fork. It's a fork of a kind of fork of Bitcoin, but it has its own kind of custom logic and privacy preserving stuff. And so the answer actually on this entire list of live and available networks that are not 51% attacked and that have fair launched is zero, right? So Bittensor is one.
How was Ethereum? So I just don't know the answer. Like, how is Ethereum an unfair launch?
It was done using an ICO that very few people in the world knew about. If you had invested in the Ethereum ICO, I have some friends that did, by the way. They're all very rich people. And you would be buying an Ether contract that was almost like a point system. And it was, I think, a few hundred people that participated in the Ethereum ICO, maybe 1,000 or so. It may have been 1,000. I can't remember. It's not that many, really not that many. And the price of Ethereum was 31 cents in that ICO. 31 cents. That was the price of one ETH. That is not fair. And they basically pre-mined 50% of all of the Ethereum and allocated it. Let me walk through column E, token supply. Why is token supply important? Why is token supply actually an important thing? Well, let's go look through the list. As we were discussing earlier, infinite incentives are naturally inflationary. They are inflationary. Your purchasing power goes down for what you're incentivizing. The vast majority of these are not finite. They are not capped supply assets where you have discipline on the printing of the actual asset. The vast majority of these are either actually fundamentally unlimited, right? Or they have been created with a pseudo capped supply that is almost meaningless, which is in the tens of billions of a token, which also has a lot of divisibility. So it's like you've created so much supply for a thing. It's just ridiculous. You can take one Bitcoin and slice it up by 100 million, and you'll get this thing called a Satoshi. It's called a sat. 1/100 millionth of a Bitcoin. And so you have to run the math. 100 million times 21 million. That's a pretty huge number. That's the universe. That's the universe of things that Bitcoin can represent, essentially. By the way, actually, recently, this is super fascinating. They're slicing Satoshis. You can do a slice and a fraction of a Satoshi. That's so interesting. There's some projects that are messing with this. So, but look at the list and look at the discipline. It's laughable. The whole list is extremely laughable. 50 billion average token supply cap. 50 billion average token supply cap. I would argue the next column is more important. Let's get to the next column, shall we? The next column is column F in my spreadsheet.
Let's see it.
And I'm going to share column F. So column F is the percentage of the pre-mine. This is very important. This is very important. What percentage of the total token supply was pre-mined at the creation of the network, pre-created to put in circulation? It's like when you wanted to get a vanity book deal and you bought 50 million copies, you pre-mined 50 million sales.
I see.
It's bullshit. It's bullshit is what it is. It's basically criminality masquerading as financial discipline. That's what it is.
So what does it mean like Cardano pre-mined 80%? What'd they do?
What it means is they went into the chain code when Cardano was created, and Charles Hoskinson is, a known scammy person in the crypto ecosystem. There's basically no applications that run anything of usefulness on Cardano. And it currently has a market cap of, wait for it, $28 billion. Why? Because Charles was a co-founder of Ethereum with Vitalik, right in the early days. All of these tokens have the same qualities. Massive pre-mine, massive pre-mine, right? And, that creates perverse incentives. It's just like saying, I'm going to print and reserve all of the equity of the entire company for myself forever. And, creates perverse incentive. Like, you could do that. Okay, look, if you're Michael Bloomberg, again, the world is changing. If we're talking about equities in companies and you build a great product, well, you're going to have a dominant position for a long time if you control the whole thing, like Xi controls China or Putin controls Russia, right? It's possible. It results in bad incentives that breed totalitarian dictatorship, stasis, and monopolistic behavior. That's what it breeds.
So on subnet tokens, on Bittensor, 18% of the tokens of any subnet is reserved for the creators of that subnet. Would you consider that pre-mining?
Yes, but that is not a pre-mine. That basically directs the emission, right, to the owner's wallet. So for every block of TAO that gets created, it gets divided up across all the subnets. And if you have 1% emission, you get 1% of that block reward. So currently, if there's 7,200 TAO that get produced every day on the network, if you had 1% of emission, 72 TAO get emitted on the network. Of the 72, you would have 13, just under 13, get emitted to the owner wallet of the subnet in the alpha token. And then basically the other half, 41% and 41%, go to the miners and the validators. There's a new Bittensor upgrade. There's a new Bittensor upgrade coming where it's called eTAO or expressive TAO. That'll be landing probably in the next couple months. My co-founder, Cameron Fairchild, is actually writing the code for all of this. And he's kind of like the core maintainer for Bittensor. That will allow the subnet owners to modulate the degree to which the emissions get paid out of their owner wallet and back to the miners or the validators. And so we could be living in a world where miners basically have the vast majority of the reward and validators have a small amount for validating the outputs, but the vast majority goes to the miners. And I would personally argue, subnet owners should get nothing. Zero. Maybe 1%, I don't know, for like owning the subnet or something like that. They should mine their own subnet. Why not? You're not conflicted.
Really
You're not conflicted at all. You're not conflicted at all. If it's a airtight incentive mechanism that is not exploitable and not gameable, if it's precise and the network can make guarantees about those properties, you should be like Satoshi. Guess what? This is fact. People should fact check me. By the way, actually anything I say should be fact checked. I'm really careful about what I say. Satoshi mined Bitcoin in the beginning and he mined 1 million Bitcoin. He mined 1 million Bitcoin. Currently, that's worth about $125 billion. Satoshi's wallets hold $125 billion of Bitcoin that he mined, which cost him nothing when the block reward of Bitcoin was, which was every 12 seconds was 50 Bitcoin a day. So there's like thousands of Bitcoin per day or something. You would have been able to mine multiple percentage points of Bitcoin in the first year of Bitcoin's hash rate difficulty, because you could literally mine it on like Linux boxes. You could do it, in your basement. And a lot of people did. And then the hash rate got more and more difficult, right? And so on Bittensor, this is something we're releasing soon from the research team at Latent Holdings. But on Bittensor, each subnet has a hash rate, right? Each subnet has its own sort of like digital commodity difficulty threshold for fairly mining the digital commodity from zero, always from zero. There is no pre-mine. Very important. So when we look at column F in this table, which is $1.5 trillion of value, every single one of these cryptocurrencies, not some, 100% had a massive pre-mine of the token, with the exception of Monero and stablecoins, which are exceptions, of course, because stablecoins are pegged to single currencies in terms of collateralization. All of them raised venture capital with the exception of the meme coins. Of course, why would a venture capitalist fund a meme coin like Pepe the Frog, Shiba Inu, or Dogecoin? No, they wouldn't fund those. By the way, I'll tell you a hilarious story briefly, just as a sidebar. I know someone who mined Dogecoin when it was like literally a joke in the beginning. I think he has 100 mil of Doge, and he's like a software engineer, and he didn't create a startup or anything, just like, as a software engineer, really talented guy. and we actually fired him for one of our companies because he just like wasn't working that hard. And we were like, oh shit, this guy's like not cracked. He's not shipping. So we got to let him go. But we were like really chill with him. We were like friends and stuff. And I was like, dude, like you're so smart. Like you're super talented. Like, why aren't you shipping? And he's like, all right, look, I'm just going to be real. I'm like super rich. I don't need to work. And I was like, what do you mean? What do you mean you're super rich? He's like had this like software engineering job. We're paying you like 150K. And he's like, dude, I mined Doge in the very beginning.
How did he think to mine Doge? Like, was he mining every meme coin?
He was just like into mining cryptocurrencies and like into that whole subculture. It's like a subculture thing, you know. And he thought
how
it was
do
cool.
you mine Doge? Is there what is the mining of Doge?
On Dogecoin? Yeah, it's similar to Bitcoin. Interesting. Yeah, it's a hash rate. They have like an ASIC thing, and you set up a mining pool. There's like different mining pools. It's similar to Bitcoin. Yeah, so it's like basically a Bitcoin fork. Dogecoin was a Bitcoin fork.
So there's one column I think you should add to your spreadsheet, which is what is the every token does have incentives. Like Bitcoin, we know you get
Correct.
more Bitcoin when you mine and validate transactions. So
correct.
But this is a big issue I think in the crypto world, is that the average retail speculator, people who like go on Twitter and say, oh, you should buy this token, it just hit its resistance, now they don't understand that every one of these tokens have some degree, from, let's say, rank it from 0 to 10 of incentive. And I will call out the ones, or some of the ones that don't have any incentive. Like, take a look at Uniswap. So Uniswap is this DeFi exchange. It's growing, it's doing well, but the Uni token does not share in the growth of the Uniswap exchange. All you get with the Uni token is you get a right to vote on governance for the Uniswap exchange.
That's correct.
So I think that's a big problem for a lot of these tokens. Now Aave, which is the biggest lender in the crypto world, it used to be just a governance token, meaning it did not benefit from the growth of lending on Aave. But now Aave switched about 4 months ago, so that they share their revenues with the people who stake their Aave tokens. Now there's a real incentive to own it, and the token, I think, tripled in the past couple of months, or went up huge in the past couple of months. And so I think it's important to separate out the tokens where it's just a marketing scam, I feel. Oh, Uniswap, I heard about them, I'll buy the Uni token. People do that without really understanding why they're doing it and what the real incentives are. Aave switched from no incentives to incentives. It's doing better. TAO has like infinite incentives to own it, which is great. Like TAO, again, it's structured very much like Bitcoin. So yeah. I think it's worth mentioning.
I threw this together to answer your question on like, what's the use case? What's the purpose? I put a purpose column together, which is called an H. So that's what I'm sharing on the screen. And it's interesting. Basically, every one of these cryptocurrencies above Bittensor is just like finance payments. More finance, more payments, more finance, more payments. Oh, payments, meme coin, memes, internet memes, fun times, finance payments. What's the market? What are they all going after? Right? They're not going after Bitcoin. Bitcoin is going after all of fiat currency, okay? That's, like you said, $150 trillion. What are all these things going after? Finance payments. 10 trillion? Maybe. I'm being generous here. All of them. The same TAM they're going after. The same TAM. 10 trillion. Honestly, maybe 5 trillion if we're really honest. Exchanges and payments. 5 trillion. Let's just say 10 trillion. Right? The whole market. Bittensor is going after all of equities, all of derivatives, all of AI, all of compute. I mean, we're talking about many multiples of Bitcoin. So my intention for putting this little spreadsheet together was to articulate to people on no uncertain terms that Bittensor is going to flip all of these. 100% of them.
It's
100% of them.
I look, obviously I agree, and I'll agree with, I'll give an example of a subnet. Each episode we've been talking about weird subnets that we just vaguely know about. So do you know Subnet 102? It's called Better Therapy.
I've never heard of this one. Tell me about it.
so it's crazy. The AI models are basically all AI models of different schools of thought within psychiatry and mental health.
Okay.
Basically it's a mental health subnet. They're trying to recreate the entire mental health industry. And the validators basically determine if the miners are so again, each miner is an AI model representing like a doctor of psychologist or psychiatrist or whatever. So the validators determine, are they valid with the latest mental health research? Is each model have a good tone, is responsive to what the user is actually asking? And then the users of the subnet, by the way, I don't think the subnet's actually launched yet. This is just based on reading about it. The users of the subnet are like patients, and they get to say, hey, I'm feeling stressed today. I'm overworked. What should I do? And the validators will basically kind of figure out, okay, this belongs more in the cognitive psychology school of thought, so I'll pick this cognitive psychology. Basically, the validators throw the question out to all the miners. The miners give all the responses, and then the validator picks the right response to give the user. If I'm reading the literature correctly, so mental health industry, it's a several $100 billion industry, and here's one subnet. It almost seems like it has nothing to do with AI, but all the psychiatry models are built are AI models, and the AI models are built using tens of thousands or maybe more than that of transcripts of dialogues between patients and therapists, and also all the research papers on mental health that have ever been written. So all of this massive amount of knowledge and context and so on. Does it replace human therapists? Maybe in most cases it does. And guess what? When I was seeing a therapist, it was $600 a session. Better Therapy charges $1 a session for arguably better results because there's no bias. There's the AI models keep improving. There's infinite scalability. So your therapist is always available. And it's just very interesting, like how of course, the mental health industry is a derivative of currency, okay, because you use currency to pay for the services. It's like, and here's this odd thing that you would never think of. Oh, the mental health industry. What does Bittensor have to do with that? Well, subnet 102, this one little subnet, Better Therapy, might actually replace this entire critical. 60% of Americans or adult Americans see therapists. So it's a huge industry, and it's an expensive industry. And at $1 a session, no human therapist is ever going to beat that. And most people don't really need, like, really, we need techniques for stress. We need techniques. I'm feeling this today. My pet just died. I'm feeling this today. What are some standard things I should know about how to overcome this depression or whatever? And, and it can get much more sophisticated, but it's just fascinating that someone would make a subnet behind this, and it's totally AI powered. And it's just fascinating to me.
Yeah, it's really amazing how many categories of different types of digital commodities, from this kind of healthcare example you just provided to, there's drug discovery happening on Bittensor.
Yeah.
There's 3D assets. There's programming competitions. There's coding AIs. There's subnets doing all kinds of data generation, like scraping really valuable training data much more capital efficiently. Obviously, all the compute related subnets. And, one subnet that I think could potentially bring in liquidity and provide incentives, and perhaps the largest of all markets, like, maybe not sort of fiat scale or derivatives or, equities scale, which is like, hundreds of trillions, but tens of trillions, which is like way up there, is the energy market. And the energy
Absolutely.
market, the energy market is who makes the nuclear reactors, who makes the solar panel things, and you lay out solar farms, who makes wind turbine, nat gas, geo, like thermal, all these things. And the largest bottleneck for scaling AI is energy over the coming years. I've been tweeting a lot about this. I think a lot about it. China's building 130 gigawatt scale nuclear reactors. That's 150 gigawatts of energy. The United States is building exactly 0, and we're going to need hundreds of gigawatts of power just to turn on and run all the chips that Jensen's making over the next
Yeah.
few years. So how do we actually solve this problem? Well, we've got to fucking compete with China. China is a decade ahead of us. They are 2 decades ahead of us. We are in La La Land in America, thinking that we are in a race. La La Land. China has won. Sorry. I'm sorry, China won. Sorry. Done. It's done. It's done. How do we actually save ourselves from being swallowed by China the moment we stop buying so much shit from them? We are their number one customer. There's a great economic partnership. I wonder when we start onshoring so much, the AI is making so much for us, and we're no longer a great economic ally. We are then their enemy. They are our enemy. That's not good. Very bad. Very bad. So we need to build our own energy independence from China. This is very important. And we need to permissionlessly incentivize the production of solar, small modular nuclear reactors, fusion, and fission energy production through the power of Bittensor subnets. I really strongly believe this. I don't know how it'll be done. But we need to design the incentive mechanisms using the best knowledge that we have about how to actually create the sort of the attractor state for the best engineers and the best people who are actually like nuclear researchers. By the way, highest density in the world of nuclear researchers, guess where they're at? Guess where they're all at? They're all in China. Oh no, again, China, they're all in China. Oh, so we've got to train the people to be able to do that properly. We can't do that with AI just yet because this is like a lot of physical stuff. And the humanoids aren't remotely, where the Will Smith eating the spaghetti from a few years ago, the video, and then it gets better and better. And then like the newer AI videos have a guy eating a spaghetti, photorealistic, perfect 4K. You can see the spaghetti perfectly falling off. Physics are perfect, right? The humanoid robots that we would want to use to build the small modular nuclear reactors that we need to build, hundreds of them that are not yet being built in America. The quality of the Optimus robot and Figure and all these other ones, humanoid robots, is like the Will Smith video eating the spaghetti from 3 years ago, from 4 years ago, right? And it's not progressing at the same rate. It's not progressing at the same rate because we're in a world of physical limitation of manufacturing these things. And I would say it's moving at maybe like a third of the pace of improvement. So it's moving fast. Don't get me wrong. It's moving very fast, but it's moving at a third the speed of software AI model improvement. And we are going to hit a wall in terms of being able to increase the capability threshold of these models unless we get really good at energy production and energy efficiency. It's a really big problem.
Definitely energy efficiency is something that I actually know somebody who's working on a subnet for energy efficiency. So how do you predict electric usage across an electric grid so the electric grid knows whether to buy or sell or to buy futures on energy and so on. So if you could do effective energy prediction and energy usage, that goes a long way. But of course, it doesn't provide you nuclear fission. So
orchestration is great.
Really needed.
Those things are also really important. Those are really valuable. Orchestration, coordination, optimizing bin packing, essentially, like where you're sort of placing resources in a finite space. That's really important. We need to make better, efficient use of what we have. But we need to produce orders of magnitude more energy than we currently have. Orders of magnitude. This is not understood. This is not understood at all. All of America consumes 500 gigawatts. Low seasonality goes up to 800 gigawatts of power every year. Wow, that is a lot. Like I just mentioned, China is bringing online in the next 1 decade or less, 150 gigawatt scale nuclear reactors. In the United States, because of regulation, it takes us a decade to get one, just one.
So that's scary. There really is this is one of those things where it looks like there's no solution at all.
No. There is a solution. Open source, permissionless incentives will find a way. We will find a way. If we are relegating the pace of progress to Elon and Sam and a small handful of guys that are squabbling all the time and trying to be, mega billionaire, poster child, god kings, whatever, and just drama all the time, all the fucking drama. No. We're screwed. We're definitely screwed. Yep, definitely screwed. But if we harness the power of humanity to be pointed at these problems, I think we have a chance. Honestly, I think we have a chance. It's not a guarantee, but we have a chance.
You know how on your spreadsheet you had categories like DeFi or payments? Well, in crypto, there's all sorts of categories. Decentralized finance is one of them, but decentralized science is another. Like, for instance, discovering new drug compounds like Metanova is doing. That's a subnet. Or better therapy, a subnet I just described, is decentralized science in the mental health space. So perhaps there's a way to get the incentives right for a decentralized science subnet focusing on building, small modular, nuclear reactors. Like
Absolutely.
that would be the way to do it. I wonder if that's something that's too hard right now.
No, there's quantum subnets. There's chip design subnets.
There's chip design subnets.
I think that. Yeah, I think that there's some cooking. They're not live yet, but they're cooking. I mean, I've proposed a lot of these categories. This is not rocket science. Oh, by the way, speaking of rocket science, we should absolutely have rocket science subnets on Bittensor. Full stack, building the rockets, testing them, getting them to go into low Earth orbit. Basically a SpaceX subnet or a SpaceX collection of subnets that dematerialize and break down what SpaceX does, and basically model it as a variety of subnets, each doing one specific thing in the supply chain.
This leads me to a question that I have about a lot of these subnets. What if the miners are smarter than the validators? So how do you know
they are? They always are.
So then why are the validators qualified to rank the miners?
Because that's the way human consensus works, and we need a check and balance, kind of like a referee dynamic, to be able to verify before we pay out the emission rewards to the miners.
So how do the validators adjust if they pick the wrong miners as the winners?
You have to have a very precise way of measuring the commodity in a way that it is not exploitable to presenting work that is claimed to be new and solving the problem, but is actually just copied from somewhere else, right? So this is actually a very deep rabbit hole of more of a technical conversation. But I would encourage people to read our developer documentation to learn about how this works. It's pretty technical. I think that there's a lot of ways that Bittensor will need to provide more trustless, algorithmic, cryptographic guarantees of the work that was actually done, right? So for example, if you look at the Bitcoin consensus mechanism, it's not the incentive mechanism, it's the consensus mechanism. It's called Nakamoto consensus. The Bitcoin network uses this consensus algorithm called Nakamoto consensus. And the way Nakamoto consensus actually works is Nakamoto consensus uses a set of rules that produce this thing called proof of work. And proof of work relies on the cryptographic measurement of the SHA-256 hash function, right? So the proof that you provided that work is impossible to fake. You're providing a specific hash of a difficulty, of a probability distribution of a difficulty threshold on the SHA-256 hash function, which is a very high entropy cryptographic hash. And if you provide that to the network based on the current difficulty of the network, there's a deterministic certainty that if your hash is correct, matching that requested difficulty, you will get rewarded in some or all of a Bitcoin block on another probability distribution. Wow, that seems really damn secure. Guess what? It really is. 17 years, never been hacked, never been gamed. There was a couple of bumps in the first few years when they were figuring out the code. There were some bugs. There were some bumps. In the first 2 or 3 years of the Bitcoin network, there were bugs. There were some bumps. There was a soft fork, right? But they figured it out. That's really what I think Bittensor needs to figure out. We need to get to a place where the verification logic for these subnet commodities is so airtight and so secure that we know the emissions going to these subnets is actually precisely measuring the net value appreciation of the commodity relative to the incentive value being emitted into the subnet on a block by block basis.
It's hard though, because each
It is hard.
subnet is each subnet's creating a different type of value.
Yes.
So it's hard to measure. That's why I do like the abstraction of the incentive mechanism. Like when you describe this TAO, this upgrade that's going to happen, where the subnet owners could change the percentage allocations of the incentives between miners themselves, validators, and so on. I like that. I think the more abstract the incentive mechanism is, the better. And then, to your point, you have to make if the subnet owner is making the rules of how the UMA consensus is going to work for their validators, then they just have to be really good at it, or they'll fail. Is the idea?
Correct. And I mean, also, these are all permissionless roles, so you can play the role of a subnet owner, a subnet validator, and a subnet miner, all in in the same day. And many people do this, right? And so there's definitely a big evolution. Also, guess what? The same is true for very small startup teams that otherwise they're competing with companies that have thousands of people, and they're doing it with 10 people. A lot of those people are wearing multiple hats. They're engineer, salesperson, QA testing person. That's how innovation works. You have more small, efficient teams. Telegram is run by 50 people, and it has $1 billion every year in profit, and over 1 billion users. Really incredible business. Business. Tether, another fantastic business. Congratulations to Paolo and those guys. By the way, I'm a really big fan of Tether. They contribute back to open source big time. They are huge. They have lots of open source initiatives. They share a lot of their open source. They invest in a lot of open source ecosystems. They're building some really interesting tooling. But just on the capital efficiency side, this is a 150-person company that makes $15 billion in profit every year. That's incredible. Wow.
Well, the stablecoin business in general is the perfect Warren Buffett style business, because think of an insurance company, which is Warren Buffett's big business. An insurance company takes your money every month, and you never want that money back. If you get that money back, it means you were sick and you had to get your money back. So you want the insurance company to keep all the money. So they're like, fine, we'll keep all the money. We're going to invest it. We get to keep 100% of the profits until we have to give you your money back. On average, they have to give all the money back. That's how they work it out statistically. But they keep 100% of the profits. Stablecoin is very similar. Oh, here's $1. I get back $1 worth of stablecoin, and I'm probably never going to get my physical dollar back. I'll keep the stablecoin forever. It's $1. And the stablecoin company puts it in T-bills, and they get 3-4% a year forever on all the hundreds of billions of dollars that are going into the stablecoin businesses. By the way, this is why the U.S. government loves stablecoins, is because and why they're forcing stablecoins to buy treasury bills, because stablecoins are going to replace China as the biggest lenders to the United States. Stablecoin companies are going to be the biggest lenders to the United States. I don't know if this is good or bad. We're sitting here evangelizing, TAO, but the biggest evangelist of the stablecoins is the Treasury Secretary of the United States, Scott Bessent. He has said it's going to go from a $200 billion industry to a $4 trillion industry. And why not? Because that means $4 trillion of more loans to the U.S.
He's being conservative.
Industry.
Scott he's really being conservative. We're talking about tens of trillions of dollars.
Yeah, I mean, look, again, there's $150 trillion in fiat. My guess is eventually all of it turns into stable coins. So
why not? Yeah, I'm sold. I'm totally sold on stable coins. I mean, I just think that at a certain point in time, you can tether and peg yourself to the currency, but you can't tether yourself to the production of the currency, which is the fundamental problem.
Right. Stablecoins do not solve the problem that Bitcoin was created to solve, which is
a tether purchasing power is still going down. A tether purchasing power is still going down.
Like Bitcoin was invented to solve the problem that there would be human error in the decision to print more currency. That an individual is deciding this, and they're going to make a mistake, and there's going to be inflation and so on. So Tether doesn't solve that problem.
No. In fact, Paolo, if you watch a lot of his recent interviews, they're fantastic. I highly recommend it. Brilliant man. High conviction man. Very high conviction man. Super brilliant man. strongly believes in Bitcoin and made a public commitment recently. I thought this was very interesting, that Tether is going to be the largest Bitcoin miner in the world by the end of 2025. That's what he said. That's it. Very impressive. Very
I didn't know they're
impressive.
doing any Bitcoin mining.
Yes. He said, no. He said, largest in the world. I think by the end of this year or by the end of next year or something, soon timeframe. Let's say soon timeframe. Wow, that's very impressive. The largest Bitcoin miner in the world is Bitmain in China, and they control half of the Bitcoin hash rate, which is about $10 billion a year in a block reward at the current price of Bitcoin, 125K. Let's say Bitcoin goes up by 10x, $1 million. I think totally reasonable. That's $100 billion a year. That's $100 billion a year in earnings if they replace the largest Bitcoin mining pool. Now, of course, all that's not going to one company. Could they build a mining pool that's like literally, half the hash rate? Unlikely, but they believe. And Michael Saylor thinks Bitcoin's going to 20 million per token in the next 20 years. So if that happens, I mean, we're talking about 150 times value appreciation.
By the way, Michael Saylor is very interesting because he's raised so much money and because he has so many creative mechanisms now for raising money, he could literally buy up all the supply that's being created by the miners.
Close to it.
He's starting
Yes.
to get to that point.
Yes,
And now let's compare that to Bittensor or TAO, the TAO token. There's starting to be these public treasury companies like TAOX is one of them, Oblong, XTAO, there's a couple in Europe. And it doesn't take much to basically get all, like 90% of TAO is staked. Something like 90% of TAO is staked. And you don't need that much raised in a public treasury company for TAO to basically start capturing all the supply. And that's also going to be we've talked about catalysts for TAO before. This is a catalyst we haven't talked about, but the public treasury companies that are buying TAO, that by itself could push TAO to $1,000 to $10,000 per token.
Yeah, what you just said about Michael's purchasing is really interesting. I was just fact checking this before while you were talking, but he has purchased so far this year over $8 billion of Bitcoin. And it's August 15th today. The current block reward annually at the current difficulty level of the hash rate and the block reward is 3.125 Bitcoin. I think that includes fees per block. That's about $20 billion a year. So he is approaching 60-70% of the total Bitcoin block reward just by buying the Bitcoin, not by mining it, but by buying it through MicroStrategy and all of his other instruments that he's been creating, to raise equity capital and stuff. And
it's like a self-fulfilling prophecy. Like
it's really incredible. It's incredible.
He's going to make Bitcoin $20 million just because he's going to have all the supply. And to your point, it doesn't matter that he has all the supply because Bitcoin's divisible to 1/100 millionth. A Satoshi's 1/100 millionth of a Bitcoin, and even that's going to be divisible now.
He could get to a place where he's purchasing all of the newly produced supply, the vast majority of it. But this is the interesting thing: he's not buying all of the newly minted mined Bitcoin. He's buying it from other holders that already have it from previous blocks in the past,
right?
Many, many years ago. And so it's the public markets, whales. He could do OTC transactions, I'm sure. Strategy's doing all kinds of OTC deals, and other institutions. Some other institutions might be wanting to let go of their Bitcoin, and also he could just be buying it off of the retail float on Binance and on Coinbase and on all these exchanges.
But a similar thing is not going to happen on, or when I say not, I'll define that. But Bittensor is a different situation because with Bitcoin miners, when you mine a one Bitcoin, you kind of have to sell it the next day because your utility bills are so big. You have to sell, when you're mining Bitcoin, you have to sell 90% of your Bitcoin just to pay your utility bills.
Correct.
But with Bittensor, when you mine TAO, you don't have to sell it. In fact, many miners, then they get their new TAO and they stake it. So that's why such a large percentage of TAO is staked. So the supply of TAO doesn't necessarily go up with the mining. And that's why after this halving that happens in December, I think that combined with the rise of these treasury companies, combined with potentially raising the cap on subnets, I can't even mathematically, it's ludicrous how high TAO can go. That's what makes me, just as a investor, forget all the philosophy now. Like, and that's what originally got me TAO pilled, was all the philosophy of TAO. But as an investor, I can't even, the supply and demand equation is going to be ridiculously in favor of low supply and enormous demand.
Yeah. No, it's really remarkable. I mean, there is sell pressure on Bittensor to a certain extent because people are mining these commodities and they have to pay for either data center fee, cost of compute, cost of the GPU compute, or cost of some cluster somewhere to do a training run or inference. But the fundamentals of Bittensor, I think, show you that people want to hold the asset to basically either speculate on its long-term impact and value production for society, which is certainly a big aspect. By the way, I think speculation is part of value investing. When people say value investing, you're speculating
Right.
on a lot of things. That's the same thing. It's the same exact thing. Value investing is speculation. Speculation is value investing. They're the same thing. Fundamentally, first principles.
The word value is weird too. Like, and Warren Buffett realized this early on. Like, what is the value of a brand? It's not the same thing as having dollars in the bank, but it is in some ways translatable. And so that's why so many people get caught by value traps, where it looks like it's a value investment, but it isn't. And so, yeah, you're right. It's all speculation about the word value.
Yes. We got a lot of questions from the audience. James, do you think we should take a couple?
We have to do it because you put out the challenge that we're going to do a 3-hour podcast. So let's do it. Let's answer a couple of questions.
We have only, let's say 40 or 50 minutes, but I'm sure we're going to be able to get through some of these at least. So let me share my screen. And which ones are interesting, James?
Let's just go down from top to bottom, and then we'll see which ones we feel like
Let's
answering.
try to do fast-paced.
Okay.
Type of thing. Okay, question 1. How do you steer the protocol towards real-world AI adoption and avoid fragmenting?
What does he mean by fragmenting?
Yeah, I mean, I think fragmenting could mean, this is Marcos Deros asking this. I think fragmenting could mean just like, there's all these areas that maybe aren't related to AI, or, we need to focus on real world AI. Look, I disagree. Marcos, I think the word AI is a meaningless buzzword. It means nothing. It's silly. It's kind of like, it's like computer or technology. It kind of means something, but at the end of the day, technology transcends boundaries. Technology transcends the encapsulation of these concepts that we familiarize ourselves with, like a smartphone, right? Or AirPods. It's transcendent. Bittensor is transcendent of all categories. To say that Bittensor should be relegated to the domain of AI is equivalent with saying that open source should be relegated to the domain of source code, software source code. No, open source is transcendent. It transcends things. Bittensor is transcendent. It transcends all categories of incentive. Bittensor fundamentally transcends all categories that you can describe incentives for. That's kind of how I think about it.
I 100% agree. In fact, yesterday I had an experience where, or 2 days ago, I made a tweet describing how here's an interesting idea for a subnet that creates financial newsletters, and it would completely replace, or at least sit side by side with, the financial newsletter industry. And I gave what the miners would do, what the validators would do, what the subnet would do. And somebody responded and say, oh, this has nothing to do with AI. It's a low IQ idea. That was what he said. It's a low IQ idea. And I'm like, all right, the world needs low IQ ideas too. It doesn't just need high IQ ideas. Like, not the great thing about Bittensor, it's not an AI network, it's an incentives network. And AI is a big component of that. But again, we've talked about this before. You can make Airbnb, you can make an Airbnb subnet. You can recreate Airbnb with the subnets. The miners offer up properties that have spare rooms, and the validators match a customer's request with the right miner. So, okay, I need a room in LA for 3 nights. Oh, here's a miner offering a room in LA for 3 nights. So the validator presents that to the consumer, and the consumer then buys. You could, without any resources or VC funding, you can completely recreate Airbnb within a subnet. Does it use AI? No, but we know that that's a multi-billion-dollar business.
Yeah, I mean, I think that you will really start to realize that the word AI is going to lose its meaning because AI is going to swallow everything in the same way that computers swallowed everything and the internet swallowed everything and software is swallowing everything. Open source is swallowing everything. It's going to swallow everything. You're going to stop using this term. This term is not really that helpful anymore. Every Bittensor subnet will use AI and machine learning and neural networks to power the digital commodity. But people aren't going to be thinking about, oh, the parameters and the weight and the loss function, all this technical stuff. They're going to be benefiting from digital commodities that improve at a faster rate than anything else could be delivering in any capitalist market. That's incredible. And so that's, I think, what people need to remember and understand. The next question is from Ben Bryant, and Ben is asking, the Bittensor community needs to find ways to raise awareness amongst an ocean of shitcoins. Thoughts on how we're to do that, please? Okay. This is a good question.
This is a great question. I love this question.
What do you think, James?
So I think just like Red Hat was to Linux, Red Hat, if people don't know what Red Hat was, it was basically a software / consulting business that made Linux, which was this open source operating system, it made Linux acceptable for corporations to buy. Like, they didn't want to buy some random open source thing that any teenager was updating. They wanted to buy a professional operating system. So Red Hat sort of made it corporate friendly, user friendly to the corporate buyer. And what is going to happen is there's going to be an ecosystem of businesses that are going to be supportive of TAO and the Bittensor community. So there will be a company that helps subnets create user-friendly front ends. There'll be another company that maybe creates a payment system so you can just play with fiat and not worry about whether you're paying with subnet tokens or TAO tokens or whatever. There's going to be a whole ecosystem of companies that will be set up to make it easier to use subnets and Bittensors. But even more directly, subnets should understand that they're not just technology projects. They're kind of like businesses, and they should think about marketing, and they should think about user-friendly front ends and reduce the amount of friction it takes for someone to become a customer. And that will happen organically because there's incentives in place to do that.
Fully agree. I think that what we're doing actually is a good answer to this question. Creating a very successful podcast, which in our first month, we're reaching, probably over 100,000 people that we've reached. That's pretty awesome. I mean, I think it's
much more than that.
Probably hundreds of thousands of people, if not more, that we've reached that are listening to what we're saying. I got a DM from someone in a prison. He's like, "Hey man, I'm in jail. I listened to your podcast. It's inspiring. I'm all in Bittensor. Bittensor's awesome. Thank you so much for doing what you're doing." And it's pretty crazy. I mean, I think we're reaching a lot of people, James.
I agree, definitely.
So the next question is from Utah Transplant Doctor. It's so difficult to understand the APY of each subnet as well as root. The wallet is very low tech. Will there be an upgrade to the wallet that includes more information? The answer is yes. There will be wallets. There will be better information. The thing about Bittensor is it's very technical. It's a pretty complex project. If you remember in the beginning of the first few years of Bitcoin, people did not have really great tools available to actually understand how Bitcoin worked, why it worked, why does it actually work? How can you use it? How can you actually benefit from using the thing? Very difficult. So the wonderful Mr. Brian Armstrong came along and he said, mainstream non-technical people, they just need a wallet. They need to build a relationship with this incredibly disruptive technology that doesn't require them to jump through new types of hoops of understanding things. It needs to be dead simple. That is underway in the Bittensor ecosystem. I'm happy to share that we make some contributions there through Latent Holdings, through the developer docs that we maintain. We have an Explore exchange tool called TAO app, TAO.app, app. And yeah, you can learn about the subnets, navigate them, understand the APY differences, how the API works, understand all the documentation behind that. So that's what I would say. But a lot of this is getting simpler over time, and tools are just going to continue getting better.
Let me just address also, he's asking, it's difficult to understand the APY of each subnet. So APY stands for annual percentage yield. It's
Yes.
like a treasury bill gives a 3% roughly annual percentage yield. But subnet and the TAO root, the yield changes almost every month because this is a new system. It's only like, whatever, 6 months old.
Yep.
And so we're seeing the yields of these different subnets and of root change quite a bit. Like 2 months ago, the APY on root, it seemed like 20%. Now it's more like 8%. It's eventually going down to 3% because it's going to get spread out through the subnets as well. So I agree it's hard to understand, but as JJ mentioned, TAO.app, which is an app that he maintains, you can see the APYs on every single subnet and how they're changing and so on.
Yes, and James is correct. On TAO app, you can go to the metrics section. So I'm sharing my screen again. And on the metrics section, you can see extrapolated root APY. And it's been going down a lot. The root network, which is just for holding a TAO, not staking it. You're just holding the TAO and you're not staking it anywhere. The root APY was 8.38%. That's actually a pretty damn high APY. However, if you relate back to the T-bill, we're talking about two times more of a return that you're getting just in interest, every year for just holding the TAO, not staking it or anything. A while ago, it used to be 30%, 20%. It was 25% for a while in April. Then it's been coming down. Why is it coming down? Root APY comes down in proportion to the amount of TAO on the root network relative to the amount of TAO staked into subnets, right? So if 90% of the TAO in circulation on the root network was staked into all these subnets, all these amazing, beautiful subnets, root APY is going to be really low, be like 1%, maybe 1.5%. Right now, root APY is 8.9% or something, because TAO staked into subnets is like around 10%. Wow. So your root APY is going to be pretty damn high. Most of the TAO, 90% of it, is not staked into subnets. So something I've been saying for a while, which is pretty obvious, when you have a new ecosystem develop from scratch, from nothing, didn't exist 3 years ago, actually didn't exist in its current incarnation 6 months ago, is you need a maturation curve. We're seeing a Cambrian explosion in the sort of the metaphorical biological evolutionary tree of Bittensor's subnet species ecosystems, right? And we need to see these organisms and these creatures develop more into higher levels of intelligence. And so kind of going from single cell to multi-cell, and then there's going to be creatures developing and birds and dinosaurs and monkeys are going to come along at some point. And then what artificial superintelligence is on Bittensor? It's when humans and the frontal cortex and the amygdala and the human brain starts to grow after billions of years of evolution, right? From the thermal fissures and the cracks of the ocean floor, developing the original eukaryotic cells, right? And life forms. That's where Bittensor is sort of setting the stage and the foundation. So more TAO staked in. We have $3 billion of TAO. We have 3 billion currently of circulating TAO that's not staked into subnets. The liquidity pools are too thin. The more TAO staked into the subnets, the TAO root APY goes down. As TAO's coming into the subnets, this tidal wave of TAO gradually, slowly going in, like a slow tidal wave, into the subnets, is a function of how deep the liquidity pools can be in the alpha tokens. They're all really shallow. They're all super, you've got 2 million alpha circulating in each pool, right? Each alpha has 21 million supply cap, right? That's only 10% of the total possible circulating supply of the alphas that you could possibly put TAO into those pools, right? Wow. Well, guess what? Fast forward a year, fast forward 2 more years, we're going to have dozens of subnets, dozens with 5 million, 6 million, 7 million, 10 million each circulating alpha in the pools. TAO root is going to go down. You're still going to have a lot of appreciation. TAO is probably going to tens of thousands, hundreds of thousands of dollars per TAO. The yield, the APY is going down massively. Alpha token yield is insane. For the ones that work, 3, 4, 5, 600% APY. For the ones that work.
I just want to add to that, like, just like I said earlier, there's going to be kind of this outer layer of companies that are going to help facilitate, like maybe creating more user-friendly front ends or whatever. There's going to be companies that create funds or indices where you can invest in, let's say, the top 20 subnets with just a single click. You don't have to really be an expert in the subnets.
Correct.
You'll just, here's the top 20 with the highest APYs. We're going to rebalance it every day. Boom, click. I'm staking there instead of staking in root.
Yeah, this is actually a terrific segue to the next question by Stu. Do they see validators creating products on top of stuff? Absolutely, yes, validators will create products. What strategies could subnet owners employ to create utilization demand for alpha tokens? This is a really good question, Stu.
Great question.
This is a really, really good question. His final 3 questions, or 2 questions, I guess, would be, how do we get more normies in without knowing they're in? Interesting. It's an interesting question. Should deregistration begin? How and when? Let me start backwards, if I may. We literally, through the incredible brilliance of Mach published a piece explaining deregistration on Bittensor. I encourage folks to read it. This is literally from this morning, 5 a.m. my time, because Mach is in Germany. And it goes through the deregistration plans, as well as the cap increase to 256. This is actually really exciting. There will be 256 subnets on Bittensor in the next iteration. We will eventually have thousands of subnets, but this is just like a new cap
when do you think
ceiling.
iteration will happen?
I think it's a function of the quality of the subnets and the precision of how the incentive is actually allocated across the teams that are actually doing really, really useful things, like very impactful things with the TAO. And so those 2 things, I think, are the big drivers for reducing the cap. But yeah, I would encourage folks to read this from the question that we were asked. This is exactly what folks need to look at.
It's interesting.
The other questions that he was asking are these. Do you foresee validators? I think James just mentioned, yes, people will build products on top of these subnets. Big time. Absolutely. How can subnet owners create utilization demand for their alpha tokens? This is a really, really great question. What are your thoughts on this, James?
I think he almost, it's another way of saying the same question with his next question. How do we get normies in without knowing they're in? Well, when I arrive as a customer, let's say I arrive at a subnet front page, whether it's Hippias, which is like the Dropbox subnet, or I just mentioned Better Therapy, which is like this mental health subnet. Don't require me, and I'm not accusing these subnets of doing this, but just in general, don't require me to put my TAO wallet address in here. Don't require me to even think about TAO. Like,
totally
I just
agree.
want to pay with $5 and with my credit card or with
Totally
Apple
agree.
Pay or whatever.
Totally agree.
So things like that to reduce friction. Like, again, in my very first business, I designed websites for 400, 500 Fortune 500 companies, and my key was no clicking, like as few clicks as possible to get to real value. And it's the same thing with these subnets. As few pieces of TAO knowledge, make it really easy to get to your value. And I think that's going to happen as these subnet owners become more business minded. And running a business is a skill, and you learn that skill over time and with experience. And they're getting that now with these subnets.
Totally agree. I have nothing to add. Question 5 is from James Gawanter. How correlated do you think TAO will be with the subnets in terms of price? I don't think I have the VC-like investment skill set to be able to invest properly in the subnets at this point. Is there any sort of public fund where I can invest in the top ones? I think that last question, the answer is yes, very soon. James can offer solutions to this. We'll offer some tools. There's going to be a lot of options. You will be able.
DCG's company Yuma is putting together indices. Like there's going to be a lot of
options. And the same way that you have a lot of options in your retirement account, or you have a lot of options in terms of going to your investment advisor, and you got ETFs, you've got indexes, you've got baskets. These things are coming. They're coming very soon. I would say to the first question, in correlation, TAO will always be a rough synthetic index of the aggregate value of all the subnets. And the way I sort of see it is I think we're probably going to stay in a world where alpha market caps are a very small fraction of the TAO market cap, but the alpha fully diluted values are many, many, many multiples of the Bittensor TAO fully diluted values. And I can explain what I mean by that. As you have more subnets, you have a larger token supply because each subnet has 21 million tokens, right? And so if you fully emit based on the exponential moving average speed of emission of each subnet, you'll have, if you just look at 256 subnets, 256 times 21 is 5.3 billion alpha tokens, right? And so 5.3 billion, if each alpha token of 5.3 billion is valued at even just a tiny, tiny fraction of 1 TAO, and TAO is valued at, let's say maybe 5 or 6 times the aggregate circulating market cap of the alpha tokens. I mean, we're talking about TAO. Again, I have a very hard time seeing TAO worth less than Bitcoin. And I think it's many multiples of Bitcoin, but I think the commodities on Bittensor could actually be worth a couple multiples of that. As crazy as that sounds, I think it sounds really crazy, but that's kind of how I see it.
It's interesting because I think there's another way to look at it too, which is if there's a subnet that ultimately becomes, and this is going to happen. It's not a question of if, but when. When a subnet becomes a multi-billion-dollar company, and there's going to be many subnets that become multi-billion-dollar companies, that's going to create a lot of demand. Like, oh, I could create a multi-billion-dollar company without VCs. I'm going to create my own sub. There's going to be a huge demand for subnets. So the value of subnets are going to go up. And how many TAO does it take to register a subnet right now?
Well, right now, all the subnets are sold. So you'd actually have to buy a subnet. But
let's say there's a new subnet.
Let's say there's a new subnet. I mean, I would imagine it's going to be a few hundred TAO to buy one on the low end. You could potentially see a world where the supply cap goes away and we have, many, many thousands of subnets. It's conceivable. And, each one is like some tens of TAO, but it's not free. It is an investment. It is an investment.
And you have to stake that TAO. That's TAO that is removed from supply.
Yes.
So if there becomes huge demand to create subnets, and that will happen when there's multi-billion-dollar subnets being sold off or created or whatever, there's going to be a huge demand for staking TAO from new subnet owners. Plus, all the validators for each subnet have to also stake TAO. There isn't enough. We talked about this last. There isn't enough TAO in the world right now to create the subnets that are going to be demanded. So the price of TAO is going to have to multiply by 10, multiply by 50, multiply by 100 to satisfy the demand for creating new subnets that's going to exist once these tipping points are hit, like the first $1 billion subnet and so on. So I think it's going to be very correlated. TAO is just going to skyrocket as the subnets skyrocket.
One thing that I'll say in terms of valuations of subnets, if I can share the top, fully diluted valuations of the subnets, which is here in this column. I'm not sure if my cursor is showing. There's many subnets worth hundreds of millions of dollars. The top few subnets are worth, 400, 500 million, $1 billion. Why do I look at fully diluted value? Why? It's very important because this shows you what the full circulation of 21 million of 64 shoots, 120 affine, 51 lium, 4 targon, 56 gradients, et cetera, would be worth based on the price denominated in TAO. There's dollars, we show dollars, but the price of TAO in the full liquidity pool. The FDV of all the alpha tokens in the pool, right? Represented in TAO. And what I would say is we need to really look at that and not so much the market caps, because the market caps are so misleading in terms of like, basically the market caps are extremely undervaluing the value of the top 5 or 10 subnets in Bittensor in terms of what they're producing. Not all of these are perfect incentive mechanisms, by the way. They're still getting iterated on massively. They will probably forever. But I would say, look at what Liam's produced, look at what Shoots has produced, look at what Bridges has produced, and you'll be able to see an incredible amount of productivity. And what I would really argue for folks, just going back to the sheet again, is be a value investor. Understand the commodity. Understand the impact of that commodity. Understand the speed of improvement of the commodity. Understand the competitive market dynamics of what that commodity is competing with, and what are the unit economics of the old way of doing things, and what are the unit economics of the Bittensor subnet way of doing things. Run a gap analysis in your head, do your own research, and you'll end up at a place that will tell you every single one of the top Bittensor subnets is massively undervalued, massively, over the long term. And there are many Bittensor subnets that are overvalued. There are many Bittensor subnets that are overvalued. The same is true in capital markets, in equities, in stocks, everything else. Same is true in life. Think about how many people do you want to really have deep, intimate, long-term relationships with for your life? It's not a long list. It should be a small list.
How long do you think it takes before Shoots is fully developed value? Meaning it has mined all the alpha tokens.
Each alpha token, if you look at a static EMA of 1.5x to 2x, let's say 2x. 2x, it's fully mined in 63 years. Exactly 63 years. 1x, it's mined in about 135 years, 130-ish years, right? 1x. By the way, that's the same as Bitcoin. All the Bitcoin are mined in about 130 years. Yeah. However, in alpha tokens, 63 years if it's 2x, but if it's 2x, 95% of the circulating supply is circulating in 7 or 8 years. 7 or 8 years. That's fast. That's very fast. That's very fast.
So couple things. One is, let's look at how Warren Buffett values a company. He calls it, and this comes from the book Security Analysis, written by Ben Graham, who was Warren Buffett's mentor. It was written in the 30s. And basically you take all of the cash flows this company will have in the history of this company for the next 50, 60, 100 years, and you discount it back by today's current interest rates, and that's how you figure out the value of the company. And I could explain that a little further, but you could look it up also.
Yep. But
that's basically what JJ just saying, that's why it's important to look at the fully developed value of what this, don't look at just today's market cap, look at like when all the tokens or 95% of the tokens are going to be,
which happens quickly,
available.
It happens quickly. It happens quickly. 5, 6, 7 years is not long. And this is something that I actually wrote up. It's a discounted TAO flow analysis as opposed to a discounted cash flow analysis.
Yeah, that's a good way to put it.
It's exactly, it's DTF, not the DTF you might think of.
Yes, right.
but the TAO one. And I actually wrote up the tweet a while ago, but I think it's actually reasonably sharp. So I'm curious what you think about it. Okay, so this is what it is. I wrote it up in April of 2025, which was a few months ago. So Bittensor subnet alpha tokens, native currencies of the subnets, each have 21 million supply caps and emit at 2x the speed of TAO, which mirrors Bitcoin's tokenomics, which means that every 2 years, alpha tokens go through a halvening. And by 6 years in, 90% of an alpha supply, right? If you're looking for the Mag 7 potential of a subnet, ask the following question. Will the FDV today be low or high based on the future DTF discounted TAO flow basis of the alpha's liquidity and strength as a core store of value or medium of exchange for the commodity being produced by the subnet? This is a very, very specific kind of question. You got to really look at this literally and unpack this. I could probably write a book about this. Will the FDV today be low or high based on the future DTF discounted TAO flow basis of the alpha's liquidity and strength as a core store of value or medium of exchange produced by the subnet? Critically, this must focus on the value destruction, repricing, potential for AI and or humans of the relative to real world methods. What's a real world method? Well, how does Anthropic train their models? That's a real world method. How does Genentech make insulin? That's a real world method. How does SpaceX make rockets? That's a real world method. How does NVIDIA make the chips, the AI compute chips? That's a real world method. So I think I just kind of invented like a pricing model, or sort of like maybe like an options model or something for Bittensor. But I think that this might be a little bit too easy. I'll pull back on it just a little bit, and I'll say cash flows are still very important.
But okay, so cash flows are important, but cash flows are going to be connected to the value of destruction, created. So
yes.
But what this also suggests is there's going to be a whole, again, kind of layer of companies outside of this. Let's call them TaoFi companies, TAO finance companies. Let's say I'm an owner of a subnet that has $300 million fully developed value, and the owners right now are going to get 18% of that future value. Well, there's going to be, financial mechanisms in place. Somebody should offer an ability to collar their future tokens that they don't have yet, to borrow against their future tokens that they don't have yet, to have options trading on these future tokens, and these options will be valued on how long the tokens are going to take to be mined, and other factors. So I think there's a whole financial ecosystem that's going to develop around the TAO ecosystem.
Totally agree.
It just hasn't even begun yet.
Hasn't even begun yet.
By the way, it's begun in crypto. There are tons of really innovative, creative DeFi exchanges. Yeah. Half of crypto is DeFi exchanges. But there's zero for TAO. So that's going to happen, and that's going to create a lot of interest in TAO as well.
Massive.
Now, I am going to call an audible. Even though we've been only recording 2 hours, 43 minutes and not 3 hours, we've been sitting here for at least 3 hours. So from my brain's point of view, we've done a 3-hour podcast, even though I haven't quite hit 3 hours yet. So we've got another 40 questions to go. I'm going to suggest we save some of them for the next episode. I've learned so much this episode, JJ. I'm always learning, and I'm always changing my mind on certain things about TAO in a good way. I really understand. I've heard Barry Silbert say and others say, and that, hey, Bittensor could be bigger than Bitcoin. And it sounds right, but I never really fully understood mathematically how I get from here to there. But now I do, that this abstraction of the incentive mechanism, makes the Bittensor or TAO a more valuable Bitcoin. And that's incredibly valuable to understand. Also, the way we're analyzing these subnets, this one episode has made so many things much more clear to me. So, really amazing. Really,
yeah.
This was a fascinating episode.
I think it was as well, and I think it's our best one yet. And I hope folks enjoy it very much.